Muy buenos días a todos ustedes. Muy feliz viernes. Bienvenidos a esta edición del Casino de su tío Salo, por supuesto, damas y caballeros, donde como siempre Alex Farhan van a venir en un rato a poder analizar todos los precios que nos manden por acá en el chat, en el E-Trading Academy, que se aprecia de corazón. Gracias por estar despiertos tan temprano. Si viven donde yo vivo, si viven en otros lados, no es temprano, son las 9 de la mañana en muchísimas partes de este planeta y bien por ti. Pero aquí son las 6 de la mañana, señores. Aquí es donde jugamos fuerte. ¿Cómo no, no? El güey que dice, yo me despierto a las 4 de la mañana, por ende debería ser millonario. En fin, ahorita vamos a darle con eso, pero el día de hoy, y discúlpenme que no he podido hacer nada y me preguntó, pero me duele el cuello, no he podido dormir nada, me estoy volviendo loco. Hoy fue la primera vez que me dormí por varias horas seguidas sin problema, pero el problema fue que mi mujer tuvo una cena anoche, entonces me quedé despierto hablando como siempre hasta las 11 de la noche, que fue un gran error para después despertarme a las 4 de la mañana. Así que felicidades, Alejandro, ¿no has dormido? ¿Qué tal si no duermes otra vez? Bien, ahí estamos. Quería platicar con ustedes, como siempre. Si es la primera vez que estás entrando a este canal o es de los primeros videos con los que te topas, recuerda, te quiero dar otro punto de vista. Quiero presentarte una opinión diferente a la de todo el mundo. En mi opinión, todo el mundo simplemente está leyendo noticias y reciclando lo que leen en las noticias en vez de pensando críticamente. Y es justo a lo que yo llamo narrativas, no noticias, narrativas. Entonces, aquí solamente vengo a darte otro punto de vista. Si ya escuchaste tu Paco favorito, que es un periquito que repite todo lo que los noticieros le dijeron, si estás escuchando a tu Paco favorito y que te está diciendo esto es lo que es y es lo que quieres creer, está perfecto. No quiero convencerte de nada. Simplemente vengo a darte otra idea a ver si te gusta. ¿Ok? Entonces vamos a empezar con esto. Jerome Powell. Jerome Powell es el chairman de la Reserva Federal en Estados Unidos, por supuesto. Y en este momento el presidente Trump le ha pedido a Jerome Powell que tienes que bajar intereses. Si no bajas los intereses, Estados Unidos va a sufrir, los americanos van a sufrir, todo el mundo va a sufrir y nos vamos a ir a otro lugar y eso no me gustaría. Queremos ser el mejor. Entonces, Donald Trump, entre todo eso, le está pidiendo a Jerome Powell que baje los tipos y Jerome Powell dice que no va a bajar los tipos. Y en este momento, las noticias, la narrativa en general es, y ahí tú dirás, que está bien lo que está haciendo Jerome Powell, porque si bajan los tipos tendríamos inflación, además de la inflación que ya viene, que no ha llegado por los aranceles de Donald Trump. Muchos economistas están todavía esperando a que venga esta inflación como tsunami, ¿no? Que bien por ellos, perfecto. Espero que tengan una silla donde están esperando. Pero es básicamente esa dinámica. Ahora, Donald Trump también se ha quejado de Jerome Powell. Jerome Powell siempre viene tarde. No me gusta mucho, siempre se tarda mucho en hacer cosas y eso no me gusta. Entonces siempre dice que Jerome Powell está tarde detrás de todo. Y parece que Donald Trump y Jerome Powell están en una pelea. Donald Trump quiere que bajen los intereses, lo que hace un dólar débil, lo que crea inflación, etcétera. Y Jerome Powell, el salvador del mundo, en la Reserva Federal, que por cierto, en las noticias todo el mundo te dice, Donald Trump no puede despedir a Jerome Powell para empezar. Donald Trump solo es el presidente de Estados Unidos. La entidad del Fed es una entidad muy honesta y sin corrupción y trabaja independientemente de absolutamente todo el sistema financiero y el sistema político. Porque no existe, o sea, imagínate lo corrupto que sería que fuera el gobierno de Estados Unidos mismo dictando intereses y todo esto en vez de los bancos, porque los bancos son los dueños de la Reserva Federal. Entonces, esto tiene a todo el mundo peleándose. Es innecesario, no tienes por qué estar peleando. Esta es una estupidez. Donald Trump, para los que no recuerdan, fue quien instaló a Jerome Powell como el presidente de la Reserva Federal en su primer término. Entonces, quiero solamente poner eso ahí. Ahora, quiero que entendamos esto primero, el despido de Jerome Powell. Tenemos una respuesta. ¿Qué pasa si van a despedir a Jerome Powell? La narrativa que están construyendo las noticias es que eso traería inestabilidad y eso traería a que el dólar se vaya a cero. ¿Por qué? Porque nadie confiaría en el dólar más, porque Donald Trump quiere hacer lo que quiera y ahora está rompiendo las reglas, las leyes del universo que dicen que los políticos en Estados Unidos no tienen nada que ver con la Reserva Federal. Si se sigue creyendo esa, invítenme a su casa. Güey, todavía creen en Santa Claus a huevo, ¿no? Entonces, si en este momento despiden a Jerome Powell, la narrativa es, va a haber incertidumbre, Tu Paco favorito está entrenado para decirte que sería muy malo para el mercado porque probaría que Estados Unidos no es independiente la Reserva Federal del gobierno, o mínimo no sería algo bien visto, y eso traería inestabilidad al dólar, debilidad al dólar, y eso va a arruinar al dólar, que es una de las narrativas más grandes que continúa en este momento. Perfecto, hasta ahí vamos, ¿no? La realidad es, no sabemos qué pasaría, ¿no? Lo que sí es, lo han estado testeando. Han visto que sacan reportes. Jerome Powell fue despedido, va a ser despedido el martes, va a ser despedido esto. No se acuerdan, no sé si sepan esto, si se han dado cuenta de acuerdo a cómo se repite todo, pero todos estos hijos de puta siempre prueban las noticias primero. Y lo hicieron con los ETFs de Bitcoin, lo han hecho con absolutamente todo. Te sacan los textos, no, no era verdad, no era verdad, pero luego resulta que sí. Es irrelevante si van a despedir a Jerome Powell o no. Lo que es relevante para todos ustedes es preguntarse, ¿va a haber más inflación o no? Ahora, ¿por qué? Esta es la pregunta del millón, ¿ok? Y la pregunta del millón porque de acuerdo a cómo te posiciones en este momento, en esta apuesta, es lo que te va a hacer dinero para adelante o te va a hacer perder dinero a corto o mediano plazo. Así de fácil. Y esto es muy sencillo. ¿Eres team inflación? Están diciendo, es que ya están empujando otra vez la narrativa también de que la inflación ya está subiendo una vez más. No, solamente subió 0.1% comparado con el pasado. Pero ahora recuerden, todos estos números de inflación te los da el mismo gobierno, que es la misma gente manipulando datos a su narrativa. Por eso nosotros los vemos como narrativa, no como datos de gobierno. Entonces, el gobierno quiere que creas que va a haber inflación, quiere que crea que va a haber devaluación de tu dinero mayor a la que hemos visto ya. ¿Ok? Eso es lo que quieren que creas. Y mucha gente, 99% de todos mis periquitos ahí afuera, han prometido esta inflación, que esta inflación va a venir. Y es obvio, ¿no? Es muy obvio. Si tenemos aranceles, las empresas no van a absorber los aranceles. Básicamente estos aranceles van a caer al consumidor y el consumidor va a tener que pagar más. Si estás en ese camp, tienes que pensar qué fue lo último que pasó la última vez que tuvimos inflación. La bolsa y los resultados subieron, porque si tienes inflación, las empresas suben precios, eso quiere decir que sus ventas suben, sus números son mejores, entregas de resultados suben, etcétera. Entonces, si eres team, va a venir inflación. Güey, no lo pienses. Entra al mercado y pon todo tu dinero en el mercado de una vez. Estás llegando tarde antes de que sea el pico de todo. Las criptomonedas, todas, Bitcoin, Solana, XRP, todo eso va a subir muchísimo por la inflación, ¿no? Igual que la bolsa, Google, Meta, todos ellos van a subir por la inflación. Tesla va a subir por la inflación. Todos estos van a subir por la inflación. Y si eres parte del otro equipo que dice, ¿va a venir inflación? La primera vez que hubo inflación, me negaste que había inflación 2 años, hasta 2 años después de que ya había signos de inflación. Lo negaste por 2 años, esa no era tu preocupación. Y ahora, mucha gente dice, no queremos que despidan a Jerome Powell porque ha hecho un excelente trabajo en bajar la inflación. No sé cómo decirle esto a esa gente, pero Jerome Powell fue el que creó la inflación en el primer lugar. Es, es, es como trabajar en una tienda, destruir la tienda, destruirla por completo. Llegan todos los jefes al día siguiente, ven todo destruido. Güey, ¿quién destruyó esto? Fui yo. Ok, no mames, ¿ahora qué vamos a hacer para limpiarlo? No se preocupen, lo voy a limpiar. Lo limpias más o menos a medias, quedan cosas rotas, pero lo limpiaste y entonces te dan un aumento de salario y una medallita que dice empleado del mes, porque limpiaste el cagadero que hiciste y ni siquiera lo limpiaste también. Es la cosa más estúpida que he escuchado honestamente en mi vida. Y aquí es donde quiero llegar. Si mi tío Jerome Powell ha hecho un gran trabajo manteniendo la inflación que él mismo diseñó y que creó, etcétera, es un poco irrelevante quién esté a cargo de esa operación en la Reserva Federal o no. Todo esto tenemos que entender que nos engañaron la primera vez, no a todos, pero a la gran mayoría engañaron de que iba a haber una inflación, no iba a haber inflación. Después, cuando vieron toda la inflación, era de, no, no se preocupen, es transitoria. Y honestamente, la manera más fácil de ver esa inflación y lo que estaba ocurriendo era ver los precios subir. Es todo. Y si veías precios subir, entendías, es inflación. Estoy hablando de que coches, una camioneta como la clase G que tenía mi mujer, la compramos por $190,000. En el 2022, a la mitad de año, me ofrecieron $400,000 por ella. $400,000. En todo ese periodo, esos 2 años, no hubo descuentos en agencias de coches. Todo estaba marcado para arriba. ¿Ok? Y ayer estaba platicando con un amigo mío que trabaja en Volkswagen, justamente de esto que ve todas las noticias, está súper lavado de la cabeza. Y le dije, ve, los precios están cayendo de todos los coches. Las casas también en general, no en todos lados, pero en la gran mayoría por volumen en Estados Unidos están cayendo. No brutalmente, pero están cayendo. Estamos ya viendo esa bajada de precio y estamos viendo descuentos, incentivos en todo lo posible. En los coches no están descontando el coche, pero te están dando incentivos que equivalen a descuentos, ¿no? Simplemente es como para el tonto. Si te suben el precio, no están subiendo el precio del coche, le están poniendo que en la ventana tienes que pagar $50,000 más, pero el precio del coche es el mismo, no ha subido. O sea, tienes que ser un verdadero imbécil para caer en la retórica de esto. Y ahora están bajando los precios y mucha gente cree que es por temporalidad. ¿A alguien le suena que hubo descuentos en la temporalidad cuando mi camioneta se fue de $180,000 a $400,000? ¿Alguien cree que hubo temporalidad de descuentos? No existe. No existió en ese entonces, no existe ahora. Estos descuentos es porque nadie puede comprar nada. Y la manera más sencilla de corroborar esto es, ve a tu agencia de coches favorita y ve todos los incentivos que tienen y cómo han bajado los precios de cuando estaba a tope. Y recuerda, aunque te estén dando descuentos en el coche, es difícil ver la cantidad que han bajado los coches. ¿Por qué? Porque nunca en tu vida fuiste a la agencia y viste que subieron el precio de la camioneta a $400,000. La camioneta siempre costó 180,000, solamente que tenía un pedazo de papel afuera que le agregaba $220,000 encima. Entonces nunca subió de precio. Y ahora estamos viendo baja de precio sobre el precio normal con los descuentos. ¿Ok? Esa diferencia de menos no se ve tan grande, pero piensa en toda la gente que compró todos sus coches o todos los coches que fueron comprados cuando estaba en $400,000 esa camioneta. Y piensa en toda esa gente que pidió préstamos a $400,000 para una camioneta de $180,000. Y ahora imagínate ser uno de ellos con tu camioneta de $400,000 que hoy vale 150, $140,000. ¿A alguien le suena que los precios están subiendo? Esta es la cosa más tonta que he tenido que explicar en mi vida una y otra vez, pero por mucho. Y es irreal, en mi opinión, que todavía la gente esté esperando esta inflación que va a venir. Van a subir precios en Costco y vuelvan. Tienen que entender esto. Y esto es lo más importante de esto, ¿ok? Si eres team no inflación, si eres team realidad, si eres team voy a la agencia y estoy viendo que están los lotes llenos de coches, ¿no? Si eres Team Realidad y estás viendo cómo todos los Airbnbs no se pueden rentar, cómo Las Vegas está vacío, cómo no hay turismo, etcétera. ¿Ok? Si eres Team Realidad, eres Team No Inflación, en mi opinión, porque lo estás viendo. Ahora, la tele te cuenta el por qué y obviamente hay muchísimos pericos muy bien educados que fueron a la escuela y estuvieron esos datos económicos súper chidos que te podrían explicar por qué va a subir todo. Pero la realidad es esta. Vas a tener inflación en cosas estúpidas, en cosas que literalmente China te vendía por $3 y ahora van a valer 4. Entendido. Y eso no es inflación. Vas a tener esa subida bueno, es inflación porque a fin de cuentas está subiendo el precio, pero van a ser mínimos, en cosas mínimas que dan igual. En tu día a día casi ni lo vas a sentir. O sea, literal. ¿Ok? Y eso sería ese es el peor escenario de los aranceles. ¿Por qué? Porque cuando no tiene dinero el consumidor, y esto lo hemos visto y lo he platicado hasta el fin del planeta, cuando el consumidor no tiene dinero, eso dicta si va a haber inflación o deflación o descuentos, no el que quiera subir el precio de algo. Engañaron a todo el mundo en el 2020 pensando que las empresas se volvieron, no sé si se acuerdan, que las empresas se están volviendo súper codiciosas, están subiendo los precios, son ellas, no es que hayamos impreso 40% de todo el dinero que existe en un año, no, son esos güeyes codiciosos de las empresas. Ok, vamos a ir con la propia narrativa que nos han vendido ellos, vamos con ella. Estas empresas codiciosas subieron sus precios porque por primera vez en toda su vida en el 2020 se dieron cuenta Imagínate que podían subir precios y la gente los pagaría. Es la primera vez en la historia que se dieron cuenta. Entonces, todos lo hicieron, por supuesto, es la narrativa. Ok, si sigues esa narrativa, pues en este momento van a subir los precios de todo y pues obviamente van a tener mejores márgenes y se va a repetir el 2020. O, y ahora esto va a sonar muy loco porque esto no lo dicen en la tele, ¿no? Entonces puede ser muy conspiranoico, como todo el mundo le dice, en vez de ver la realidad. Cuando Ford dice, vengan a comprar hoy porque vamos a darles descuentos de empleo a todos ustedes, de empleados a todos ustedes, porque van a venir los aranceles, los queremos ayudar. Ve qué buena onda se volvió la empresa. No solamente muy buena onda que mantuvo ese empleo, ese descuento de empleado por 3 meses, pero además ya agregó más incentivos y más descuentos ahorita. Así es. Y tienen más inventario que nunca. ¿Puedes creer lo buena onda que son? Están intentando traer la mayor cantidad de inventario barato para poder vendértelo. Y si pudieran a pérdida, lo venderían a pérdida porque, güey, es tipazos. O, o nadie puede comprar nada. Esa es la realidad. Y ahora, ¿por qué es importante esto para todos ustedes? Y esto es todo el punto que quiero que entiendan con todo ese choro que les acabo de tirar. Si las empresas, cuando subieron los precios, subieron sus beneficios, todos sus resultados eran mejores, sus márgenes se expanden, ¿no? Porque estaban ganando mucho más en margen en vez de vender en volumen. Eso quiere decir que menos gente compraba, pero estaban vendiendo, su margen era una delicia. ¿Qué pasa cuando ahora tu margen es afectado por impuestos, aka aranceles, ¿no? Que vienen estos aranceles, pero el consumidor no los puede pagar y no puedes subir tus precios. ¿Qué le va a pasar a Ford ahora que en vez de, vamos a usar el ejemplo de Mercedes, costaba $180,000 la camioneta en el 2019, en el 2022 costaba 400, el día de hoy cuesta 150, 140, ¿ok? ¿Qué pasa con Mercedes cuando esa camioneta, otra vez, que siempre se quedó en 180, ¿no? Siempre se quedó en 180. ¿Qué pasa, Mercedes, cuando esa camioneta de 180 ahora va a costar 200? Pero lo que está dispuesto a pagar el consumidor es 140. ¿Qué va a pasar con las utilidades y los márgenes de Mercedes? Y eso va a pasar con todo. Y si la última vez tuvimos subidas en exceso por este tipo de mentira que le vendieron a todos, que los márgenes de todas las empresas estaban mejor, bla, 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 ¿qué creen que va a pasar ahora? Simplemente quiero que piensen en eso. Yo sé que es muy tentativo pensar en la inflación y todo lo que nos dicen nuestros pacos favoritos en las noticias, pero si sales a la calle es muy diferente la cosa. Y también algo que me preocupa muchísimo es cómo están usando lo de los intereses en contra de la gente. La gente antes del 2020 no sabía cuál era el tipo de interés. No tenía ni puta idea, no lo pensaban para nada. Yo tenía que, porque estaba cuando financias películas tienes que saber cuál es el tipo de interés, más aparte lo que te cobra el banco. Y eso fue como me empecé a meter en entender eso, ¿no? En hace décadas. Pero antes del 2020 la gente no pensaba en esto. Y ahora creen que si vas a bajar intereses, eso quiere decir inflación y eso quiere decir también devaluación del dólar. No es cierto. No es cierto. Eso solamente pasó en el 2020 porque imprimieron 40% de todo el dinero que existía. Ténganlo presente, por el amor de Dios. Es muy diferente a lo que le cuentan. Y lo interesante es, todo el mundo quiere, piénsalo. La trampa fue hacer que todo el mundo buscara crédito. Les dieron crédito a todos en los que los precios de absolutamente todo, todo subió. ¿Ok? A todo el mundo le dieron crédito. Imagínate los güeyes que compraron la camioneta por $400,000 que están en préstamos de esos, con intereses hasta el tope. Toda esa gente ahora tiene mal crédito. Y cuando vienen los eventos grandes de como el 2008, en el 2008 todo baja de precio. Y llega un punto donde todo está tan barato y te imaginarías, güey, todo el mundo ha de haber comprado. Vas al banco y pides un préstamo. No le prestaban a nadie, tío. No solamente tenías que tener crédito perfecto, tenías que tener tus impuestos a la regla, tenías que haber pagado todo, tienes que tener no deuda. Para calificar para un préstamo en ese entonces fue una mamada. Y ahora han destruido el crédito de todos los ciudadanos americanos por un chingo. Y lo que me está volando la cabeza es que los han convencido de que necesitamos que bajen intereses para salvarlos. No va a pasar. Si bajan intereses y todo el mundo cree, eso haría que el precio del coche suba, se vaya otra vez a 400 y ese güey pueda salir y el pendejo que compró tu casa en Austin a tope a los más altos intereses. A los más altos intereses también se pueda salir ahora que bajó la casa y vale la mitad de lo que la compró ese güey. No, 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 no. Aquí es la otra cosa que te mienten, donde todo el mundo y todos estos súper entrenados economistas que fueron a estudiar muy duro a la escuela, te van a decir que bajan los tipos, inflación regresa una vez más, otra vez la inflación, y todos los precios van a subir. Pero el problema es, y esto es la realidad, ¿cuánta gente no conoces que no puede vender su coche porque no le alcanza para el pago de otro? Si bajaran los intereses, le alcanzaría para el otro pago. Lo mismo pasaría con las casas. Y aquí me dirán, ahí está, güey. Entonces esos güeyes van a poder comprar coches y todo va a subir. Pero imagínate que es una tercera parte de todo el país que está en esa situación y que toda esta tercera parte que está en esa situación ve que bajan los intereses. ¿Qué va a hacer toda esa gente? Güey, tengo una gran idea. Voy a vender ahorita porque ya me puedo comprar otra casa y a todos se les va a ocurrir al mismo tiempo y lo mismo con los coches. Va a haber exceso de inventario en todo. Es una repetición del 2008. ¿Y qué pasa cuando eso pasa? Todo baja. Ahora, ¿esto va a pasar rápido? No, años. Pero simplemente les quiero decir, no caigan en las estupideces que les están diciendo o mínimo pongan atención. Tal vez igual y estoy completamente mal. Pongan atención, es todo lo que les quiero decir. Vámonos con el buen Alex, como de que no lo tengo por acá. Vamos a analizar estos bitcoins, pero antes de irnos con él, quiero compartir para todos ustedes que sean unos degenerados, quieran hacer trading y quieran decirle al mundo, güey, ha estado difícil poner un negocio en todos estos tiempos, todo está quebrando. Todos los negocios chicos y medianos están bajo presión, están siendo destruidos, sus márgenes destruidos, la labor les cuesta muchísimo, hay muchas más trabas, etcétera. Por eso queremos invertir. Y aprender trading es siempre bueno para simplemente poder aprender a invertir de la mejor forma. Ayer en la clase que estábamos dando privada, en ETA justamente platicamos de eso. ¿Y dónde están nuestros retornos de los últimos 2 años en inversiones? Y simplemente un poquito de esto de análisis técnico con un poco de sentido común y ver a dónde va la tendencia de todas las empresas, puede ser muchísimo dinero en este mercado. Y es lo que quiero que se lleven. Pero si también eres un degenerado y quieres tradear como loco, güey, también te voy a invitar, como que no, cáele a nuestro Discord de Elite Trading Academy. Es absolutamente gratis. Absolutamente gratis, tío. No cobramos. Si alguien les manda un mensaje y les dice que soy yo, Alex o Farhan, están engañándolos. No cobramos absolutamente nada por esto. Vénganse. Todos los menús están del lado izquierdo. Lo pueden ver acá, Elite Trading Academy. Y lo que quieres hacer es le picas a los menús como los análisis de Alex, los análisis de Farhan por acá. Te metes por acá a CryptoLingo, que tenemos todas las abreviaciones y lingo que usamos por acá, por si hay algo que no te queda claro. También tenemos nuestro chat general, bastante bueno, honestamente. Aquí he entrado 2 veces en las últimas veces cuando alguien dice, esto se va a caer y se ha caído. Entonces, siempre es bueno también tener otras opiniones de otros traders. Acá, por ejemplo, Mango es bastante bueno. Está más que establecido. Y hay mucha gente que es así. Así que es bueno siempre tener otros puntos de vista para poder complementar tu propio análisis. Ven a compartir cuánto dinero estás haciendo. 590% en un long de 200. No mames, tío. No mames. Gato Mión. El Gato Mión sí se ha estado un corto de 500x. Bien hecho, Gato Mión. Bueno, 343%. Me da mucho gusto. Llévense su lana, perros. Y el mercado se ha portado bastante bien, bastante volatilidad. También por acá tenemos todos nuestros enlaces oficiales para lo que necesiten de nuestros exchanges, etcétera. Y si quieres aprender a tradear futuros con, con apalancamiento de hasta 500x, que es 500x, sí, en 500x en BTCC, cáele a nuestras plataformas a nuestros exchanges de futuros. Y si quieres aprender cómo usarlos, es súper fácil. Métete a nuestro sitio. Una vez más, esto es gratis. Te metes en Tutos. Y en Tutos te va a aparecer un video de cómo tradear en Bluffing. Le vas a picar ahí Y acá en 5 minutitos sabes perfectamente cómo fondear tu cuenta, cómo usar bluffing, cómo abrir la cuenta, cómo fondearla, cómo mandar dinero dentro de la cuenta, cómo comprar futuros, cómo abrir un long, cómo abrir un corto. Y también tienes acá el enlace directo para que no te vean la cara. Y también aquí abajo en la descripción del video vas a poder encontrar todos estos enlaces para bluffing, que es el exchange de criptomonedas, de futuros en criptomonedas, y BTCC, que también es lo mismo, con más apalancamiento y también tienen acciones tokenizadas como Amazon, Google, Meta, Nvidia, etcétera. Así que ahí lo tienen, damas y caballeros. Si crees que va a haber inflación, ven y compra el lado largo. Si crees que no va a haber inflación, ven y compra el lado corto. Más fácil no se las puedo poner. Aquí tengo a Alex. Vamos a darle a estos bitcoins, damas y caballeros. Guten motherfucking morning. Wait, there you go. And happy birthday, señor.
Buenos días,
Happy
muchachos. Muchas gracias. Muchas
motherfucking
gracias.
birthday
Muchas gracias.
to you.
29 años today. How do you say today in Spanish?
Hoy.
29 años hoy.
Oh,
Yo
muchas
soy 20
felicidades,
años.
señor. You
Yo
fucking
soy
old man.
29 años.
Last night, Belen had friends over for dinner, and one of the girls is like, I know, we're getting so old. I'm 29. I was like, I'm going to fucking choke you. And not in a sexual way, because my wife is right there. All right?
Your wife's
Shut the
friend
fuck up.
is as young as me.
I know. It's terrible. It's terrible. But listen, here I am talking to you guys. Look, how young are you, Alex?
24. So
Exactly. So here's the biggest loser, right? My wife has a friend that's 29. Get the fuck out of here. I'm done.
When we were signing the contract for our new condo and the landlord met us for the first time, his biggest shock was that Alex was 24.
yeah.
Well, you're also tall, so they can't believe that shit. Of course. So good for you, boys. Enjoy your youth. Must be incredible. Must be fucking incredible how it
I
feels
got
on
one
your
more
bones
year
and your
until I'm
joints.
30 and it's all downhill.
Nah, 30 after 35. 35 is because at 35 you'll be peak. That's your peak. 35, 36. Then afterwards.
Oh, okay. So then I can
starts to go downhill.
I can start telling all of the women, gee, this is peak male form.
You're heading towards peakness, towards peaking. Are we gonna look at this Bitcoin, boys? By the way, we were chatting. Was it yesterday or the day before when we got the Joule signal on the daily and the 12-hour, and they were conflicting, and we said, could it be the pump and then the dump? And it literally played like that.
That was
So now we
exactly what
know.
it was.
Now we know that that's exactly what it was. Interesting.
Those Joule setups always tell you beforehand, something's up.
Yeah.
Yeah.
It was just interesting dissecting well, asking ourselves the question if that was going to be the case and really playing out like that. Something else I've learned. So thank you.
Yeah,
Who's going to share their chart?
If front ran my long order by $700, bounced at 114.7.
What a cocksucker. What a cocksucker. Hang on. There you go.
Nice.
We'll let the birthday boy rest at first, so he can take it easy. Take it easy while he gets served tacos in bed.
Take it easy over here.
Yeah, it was a very interesting night overall. We finally had that 5-day close. And remember, we were watching that long idea to play out. We were talking about that 120 being resistance, and that was kind of the break of the range for me. If you start taking out July 22nd wick high, that would have been a very key metric to see a breakout to 122,000. But we unfortunately didn't actually reach the 120,000 or rejected even before that. Unable to take out that last wick high, leading to another move back down. We'll delete that. We'll see here. We did hold above the 9 and even 118. But again, the EMA 5 didn't hold, which is an interesting sign to see because, we were watching that to be, kind of the area that we needed to hold. Mixed in, if you don't like the 5, which again, I like using the 9, you would have also identified the 12-hour EMA 9 getting lost here. This was a major sign in the sense that, whenever you lose the 12-hour EMA 9, it generally does give you a short bias down. Now, the logical zone was the 21. You did hit that, but unfortunately, you went past that, breaking down, giving you the next target to the 34. Now, Bitcoin is in breakdown posturing. We don't want to negate the 116 level. It's a very big area of support that, we want to just understand that this is kind of at the last kind of spot where if we don't actually get a bounce from this point, you will see a deeper dump, and that deeper dump will come, in my opinion, around closer to that 109.8, 109.3 to maybe even 109.3 to 109.8. Essentially, this range that we were identifying before we were pre-breakout. We saw the consolidation. The wick highs were often rejected from 109.8s. So it's a big zone. To me, I'm really still gauging that as kind of a big zone if we get a pullback there. And it's not to really it's to really put this in like a perspective of this last weekly low. We wanted this to be a higher low. That didn't occur. We essentially wanted a shallow, and it looks better on the 5-day. It'll be easier. We wanted the 5-day to grind out some higher low. This low was just going to hold, not taking out the previous 5-day low. And then we got the new 5-day candle last night, immediate follow through, which led to a dump. Perfectly fine on this dump, but now we just need to gauge the EMA 5 on the 5-day. It's going to be crucial to really watch to see if $116,000 continues to hold. Because if so, I mean, this is somewhat been support so far, and we have confluence of the EMA 5 on the 5-day, which generally is an easy setup. You can just play the EMA 5 once it gets reclaimed, similar to the 12-hour EMA 9 setup, but in this case, you are just holding major support while at a major EMA area, which is that EMA 5 on the 5-day. So granted, this is a spot where I would be watching closely, but I would be still on the camp that, longs are going to try to get a bounce here. Not really until you get a daily closure under the 21, where I'll be concerned, and that'll be, in my opinion, the range breakdown officially. If you've been in a range, 115 to 120, it's just been what's been playing out. Very well could still keep playing out, but that's why if you use this 120, loss of the 21, loss of the 38.2%, loss of that 116 zone, that should be a good zone to at least gauge a breakdown and or give you confluence of a major move down. Specifically, too, if you use the 12-hour, that the 34 is a big zone. Losing the 12-hour EMA 34, which often was the extremity low, does give you the next target to that EMA 100. So you want to just be very understanding that, yes, you are at support. It is looking concerning, like it is in the process of a breakdown. Doesn't mean that you can't go and actually test the 12-hour EMA 9. You absolutely can do that before breaking down fully. And for me, it's just really going to be dependent on getting back above 118,000 for more upside. It's very simple. 118,000 was just the spot you need to hold. Under it equals, lower and chop, and above it often does equal the pumps up. We saw that nicely here. He was holding 118 pretty nicely. And you actually moved up, but again, this just wasn't sustained, and you then dumped and lost that 118. So for me now, you should be gauging that. The 4-hour EMA 100 getting reclaimed does give me at least a good sign that this definitely could start bottoming and moving up. But again, now we want to be really understanding that 118 needs to be either flipped back into support, or this is going to be the SR flip. Bears are wanting to open shorts with logically their stop here. So, today you are just kind of waiting to see how the daily develops. Granted, if you weren't trading on very low time frames, this move down really, you're kind of just waiting to watch, because even on this daily EMA 9, getting lost would be a major sign. But you'd also be gauging that to give you some kind of retest of it. And also bouncing from the 21 is also a big zone. You've seen this before where you've reached the 21, it's led to a bottom, and then it sprung up, reclaiming the 9 and getting back above the 9. Getting back above the 9 and expanding to new all-time highs. So for me on Bitcoin, yes, this move down was aggressive. We understand that under 118 was very, not good in terms of bullish sentiment. That would lead us to the bottom of the range, which was always at 116. Now we're there, and we want to really see if bulls are going to break down this week and into, let's say, this today even, because if you start losing that 116, mixed in with the daily 21, it will just give you a measured move down to a minimum that 113. At that point, with what we know already about that, lower right around that 110,400 zone, it's very crucial to watch. So for me, I'm more in wait and watch mode. I want to see if this support's going to hold as support. And if it doesn't, then that could easily open up a trade. If they're losing the daily EMA 9, I'd be looking at that to really solidify 118 being resistance. Because it could be like you get a bounce off the 21, you rally up to here. This then solidifies 118 being resistance in confluence with the median and lower the 9, EMA 9. It gives you kind of an easy short idea, potentially in lower high posturing as well. So, you should be gauging that. The daily is bearish for me as long as you're under 118, but it doesn't mean you can't retest that a few times before getting the full-on rejection down. Breakdown for me will be occurring if you lose 116 on any daily closure. That'll be really crucial, and that also means that you are literally right by support. And so, bulls and bears are going to try to hold this zone, while bears are going to try to catch the deviation and short down. So, for me, I would be really gauging for a bounce first before anything else, and that's just evident on this 4-hour EMA 100 getting reclaimed. Very easily can start a spring here and start moving up to this zone before rejecting. That's kind of what I would be waiting for the easy, more higher probability trade, because you at least can play the reclaim of 118, and then you can long, or if you reject, you can just short it with the stop here. Simple. So that's Bitcoin. That's what I see overall. Let me see here. Okay, so 2-week median's been hit. This is again just solidifying this zone. Needs to bounce more, rather than later, sooner rather than later, because then this would give us technically a measured move to $146,000, and this would be technically the spot. So like bulls got the bounce to the median, needs to spring and actually push us up. That is interesting to see this 2-week setup, though. It's about a 27% move to the upside if this does hold the median. And you can see here the weekly, after it got reclaimed, the weekly median, you've been seeing it solidly hold above, which is a good sign. So again, that's why on this pullback, I'm not very bearish. I do think that, if you are going to stay under 118, you could easily get an easy long trigger. And that's just evident on the 12-hour right at 118. And then 118 has always been the zone. You should be teaching that 118 is important. So just wait for that. Either rally up from this point, test 118, reject down and break down, or you're going to bottom at this 116 zone, get back above 118, make your way up to 120. It's the same thing we said yesterday. Break this all-time high here, or this wick high that was formed on July 22nd will mean that you can easily long the throwback to possibly a new high. At minimum, testing at 122. So, in summary, bulls have a lot more work here than bears, meaning they need to really start getting back above the 12-hour 9, getting back above 118, and actually pushing up here, breaking 122, going to a new all-time high potentially. Because if not, then it will just be really looming a EMA 100 retest, which is sitting right around this zone. Right in, 111. It's like, what is that? $111,000, I guess, simply. So it's right in the middle of this wick high in here. You easily, if you did dump, I again want to stress this enough, very easily can dump and actually test that weekly EMA 9, which again wouldn't be bearish at all. People just wanted this to be the higher low. It wasn't. We've come down. We've taken the low. You start losing this and coming down to here, you very well then could just get that official 12-hour weekly EMA 9 retest, which granted you haven't hit that since you broke out. These were front run, this front ran it. Nice reaction, but still you didn't actually retest it. So that is something where I'm sure bulls here want that to just be the front run of the EMA 9, where, we still very well could actually go in. Per the book, give us that bullish retest of it, which is now lined up beautifully with our, meme line resistance at this current range that we were in. So In summary, I'm really watching for a pullback here. We'll be determined on the daily losing $116,000. If we do that, then, I think we can have an argument lower, but till then, I am gauging that to be major support. And that's just shown on the 21 here. We shouldn't be front running a breakdown of the daily 21 before it actually breaks down because, well, that just doesn't work out generally. When you try to gauge a breakdown of the 21 before it actually breaks down, generally that is what squeezes you up. Same thing with the 34. You lost 21. You went to the 34. You bounced. It was no lit cigar to the 100 until you lost the 34, meaning that you can just use the same idea. This is lined up nice with 116. So that tells me that 116 will be very important. Either watch the very, very low time frames to see if it rejects or loses the 116. But overall, you should be looking for this to give you some bounce up and possibly test the 118 again. That's just shown here. You really haven't tested that zone. Very easily can. And that would be a nice bounce up. And that's not totally out of the Bitcoin nature that it likes to do. Big squeezes up, lower highs, shallow lower highs, and then dump. So that I'd be watching that carefully. The daily will guide you though. So just watch that and watch the daily EMA 9. Now, Bitcoin dominance is still looking interesting. You still are rejecting the 62.5% zone, which is important. Why that's important is because you really do want to start seeing that hold as support. If you're going above around that 62.4, 62.5%, you're going to potentially find major resistance there, which again will be looked at not the best because simply you need to get above the daily SMA 200. And you know that if you can't get above the daily SMA 200, it's going to have implications for a monthly losing the EMA 9 and also giving you the first major deviation of the EMA 100, which would be a major bearish sign for me. You losing that, you then look for a short and rejection down into August. That's just simple. I mean, that's just based on this level has been holding the EMA 9, this whole bull market. You do see it here. It's not, if you lose it, it gives you an easy target to the 21, which gives you an easy target to the median and also the next meme line. That's sitting all right around 58.2%. So it's just confluence of this zone here. It seems pretty easy if we start losing that monthly 9. But again, until then, we still have 6 days. This monthly EMA 9 is going to try to be the spot bulls grind a bottom and actually get a bounce from here. While everyone gets bullish on alts, this still is in a bounce zone more than not until you actually get a monthly loss of the 9 for the first time ever. You've had wicks below, wicks down, wicks below, and it just doesn't close under the 9, not giving you really a trigger for shorts. Each and every time you've just grinded out some kind of major higher low at the monthly 9. So here you really just want to watch that carefully and see if it holds, because if not, then that'll be a good implication that maybe this has topped and maybe this is going to go at least lower to the 57%. Still could be like, a 6% move down. Pretty nice, actually. And even here, the weekly is now in it's in breakdown posturing. When you're under the 34, this is often the short zone. Target down to the EMA 100 at 57.4%. So I'd just be understanding of that. This is looking pretty heavy. I'm not looking like this is going to turn into a big girthy green month, but rather it looks like it's going to lose, potentially expand away from this weekly EMA 34. Once that occurs, it's pretty much dead set that it's going to start moving towards the EMA 100. Again, just gives you confluence of that idea that the monthly will lose the 9 for the first time. Maybe gets a bounce from the 21, possibly. But still, you should be looking at that as still bearish. If it comes down here, still be bearish. You need to take out this low. Let me make sure I see that right. Yeah, so this low would be the low to take out, in my opinion, to really flip the monthly trend down. You see, you came down, you formed a higher low, excuse me. And then you reclaim support, broke out. You made a new high. So, I mean, you could come down theoretically and give yourself another higher low on Bitcoin dominance. But again, if you just start losing that 57.5%, generally that is where, it does start turning pretty bearish for Bitcoin dominance. You've just seen big dumps from that point. Let me look at it on the weekly to look better. You've lost it, and it's just straight down. So it's important to watch this zone carefully, especially when you have a weekly EMA 100. And you also haven't hit the weekly EMA 100 this entire bull market, so you should be gauging that as a big zone. Anyways, mixed in with the monthly EMA 21. So that to me seems like the likely spot, which is sitting at 57.4%. I do think that is likely, 57.4 to 57.6%, which is still a nice 6% dump from here. So I'd just be cautious of that if you are, trading Bitcoin dominance or alts. This has implications for definitely a move down. And this just looks like a price structure break overall, where you were holding major support, you've lost it, it's flipped into resistance. Generally a recipe to start breaking down and expanding away. It's like you're under all major moving averages, you start breaking down. Here you lose the 34, you get a free move to the weekly EMA 100, and then that gave you essentially a bounce. And then, another bounce and whatnot. But the point is that the EMA 100 is often a very big level for me on cryptos, and specifically when you use it on a weekly, it's pretty important. And it's, this is my ideal short trigger. You lose a 34, you short the weekly 9 for that extremity high, and you target down to here. So this is technically in breakdown posturing now. So that's not good if you're, trading Bitcoin dominance. Could be good if you're in alts like everyone is apparently. I guess alt season is right around the corner apparently. Bitcoin Tether dominance now. It's a quick analysis here. Still looks bearish. You're just getting that, move up to the 61.8%. We understood that was a bounce zone. We are getting the bounce. It's just now a question of, is it going to be a lower high, or are we going to start getting back above the 64.69% and then break out from there, taking you to 5%. It will be important to watch simply the reaction around that weekly and 5-day EMA 9. Simply speaking, that's just what it is. This is still in bearish retest. Could it go a little higher? Sure. Could easily go up to test the 4.69%. But again, that should just not surprise anyone. That should be giving you a lower high and a rejection down if we are truly bearish. And then losing the 3.79% even on a daily closure will, to me, signal, this is going to break down bigly to that 2.45%. And that's probably where you get $170,000 to $180,000 on Bitcoin. But again, it's going to be real dependent on this zone and this rejecting. And that's just adhering to the overall downtrend, which granted, we are still in a downtrend. And this is in a breakdown, technically, with 5-day BBWP expanding now. That's a big setup. You should be gauging this zone right around the 4.49, 4.5% as major resistance. With, of course, the extremity high, I'll always say at the 4.69%. That at least can help know if you, wick a little above it, then you come over here and then you reject. You know that the 4.69% is major resistance. But it does help when you have a 5-day EMA 9 in confluence to the bottom of the 38.2%. So, 5 days expanding on that. That's interesting to see, actually. Big setup in that 5-day. And I know the 5-day on Bitcoin is also expanding. We want to be cautious of that as well. Because on the flip side, even if, even if it's like we want a bullish move, this is still telling you that this technically, statistically speaking, is bearish, and this is going to give you a 35 to 40% move down. That's why we want to really understand that, because this 5-day is a big setup, and it still could fire off to the upside. we've seen this before where it's like chopping a bit and then it resets and then it fires off to the upside. But I just want to end this analysis by just saying that I am very cautious currently. Once we start losing, for me, daily EMA 9 and getting closures under it, which again, you haven't officially lost it. I then can start putting my bear goggles back on. We can take easily this 12-hour EMA 9 short setup and easily target potentially around that EMA 100 or the 12-hour. Because simply speaking, if this 5-day fires off, I mean, this is not good. This fired off here. That'd mean we're now starting to see volatility expansion, and this technically where we start to fire off would give us a 35% move. That is literally right at $75,000. So that is why is that important. That was my idea. If we do see this 5-day fire off, you will get a test of the weekly EMA 100. That just seems very obvious and simple to me. That would take you directly to the measured move, which would be directly where the new low was that we formed here before going up around 75,000. So we'd get another test of that. But also why this low would be very, very important to be watching around that $74,000 is because now you have the EMA 100 on the weekly moved all the way up to that point. This hasn't been hit since the entire bull market. And we saw this before where last cycle, you didn't really hit that until all the way down to here. And that, yes, granted, it was bearish. Like, it didn't lead you to a major breakout, but it still led you up 36% from that EMA 100 on the weekly, which is very important to watch and see, because that easily could mean that you will get a big bounce from that point. I'd actually bet on that. And if you bounce 36%, I don't know. I mean, from that point, it's right back to like that 1031. So, I will just end off by saying the 5-day does look like it is about to fire off to the downside, if not already. And I don't find it a coincidence that off the back of the new 5-day candle, we are getting this kind of breakdown, instant volatility. It's never a good sign to see. So that is kind of what I'm seeing on Bitcoin. I'm concerned. I'm watching 116 closely on a daily close, and I'm using that zone kind of to gauge a deeper pullback. Now, a deeper pullback still will mean we're going to the weekly 9. The weekly 9 getting lost will be my sign of, we're probably going to go and get a major dump down to probably the range lows at 1031. Lose 1031, that's going to confirm my bearish bias, which is going to mean we're going to test this low again and come all the way down to here. Now, we very well could go and test the low and then not take out this wick low, do that dirty thing Bitcoin likes to do. You play the 5-day out for the first time to the downside, gets bears all bricked up, and then you maybe get a bounce up to the 1031s again. Who knows? It's all tinfoil hat. That's why for me, just play what you know, which is simply watch 116 on a daily close. That'll be your next easy trade zone. That'll just confluence with the daily 21. You're still getting a volatility setup, so it's not technically firing off yet. So I'm curious to see what Farn has to say, because that is pretty interesting to me. I see that 5-day off, actually.
Oh, that was your chart. Let's see, Mr. Farhano Cumpleañero.
Yeah, birthday boy Farn.
Don't fuck this up.
No, not muted. I had to make sure if I was muted first.
Oh, you're good.
Where's my charger over here?
I'm gonna fire Powell. He's gonna be gone. We don't like him here. He's not a good guy, not a great guy. He's gonna be gone. The Bitcoin's gonna come down. Everything's gonna go to shit. We're remaining Powell. I promise. No pressure. No pressure. No pressure on Powell.
But
He's gone.
Dude, how hilarious was the two of them next to each other yesterday with the hard hats? It's like, come on. They're giving us one of the greatest and most entertaining shows we've ever seen, and no one's like appreciating it for what it is.
I was this morning, and I thought it was a meme at first or AI, and I was like, oh no, that did actually happen. And he's like,
that's what I'm saying.
The increase, and he found out, Jerome Powell finds out in the moment. It's just hilarious.
When he brings out the little piece of paper and he's like,
no, we just got the information. Look at it. It's right here. It's right here. You can see
approved. It's just got approved. It's just like, Yeah.
Come
Yeah.
on, boys. What else
People are
can you
like,
ask for this? Like,
did you watch the new season of Love Island? No, I'm still watching the new season of United States.
oh man, of course,
Straight up,
following the brand new season of United States, it's fucking hilarious. It's like the greatest comedy of all
Better than
time.
any TV show on the planet.
It's funnier than all of Will Ferrell's movies combined.
and
All
they're
the
both
good ones.
wearing like white hard hats too. It's just hilarious. Like,
Dude, it's amazing. Everything about it is amazing. Okay, everything.
Nothing is gonna trump whenever he, pun intended, when he had that little picture of the hurricane and he started to draw with a sharpie wherever he wanted it to go.
Dude, this is too much. This is too much goodness. I appreciate Mr. Trump, Powell, Mr. Everyone in the government. You guys are putting up a great show. Thank you. Please keep it up. It's been so much fun this
He
year.
started crossing out whatever the actual climatologists had made, and he was like, no, here's where it's really gonna go.
that's funny.
Oh man, you're an expert in weather now, I
Everything.
guess.
Everything. Okay? Everything.
Stable-minded genius. So on the quarterly right now on the momentum, we are getting a slight move to the downside, but this is a similar thing that we had in the quarterly on the previous month where it was starting to flip to the downside, but we were getting bullish candles telling you that this is eventually going to put in a hidden bullish divergence and then flip up, assuming that you don't lose this low of about $107,180 on a closing basis. Assuming you hold that $107,000 on a closing basis on a quarterly, this will eventually start to flip back to the upside on momentum, getting back over the moving average, and that will put in hidden bullish divergence by taking out these previous lows. Right now, volatility is just starting to go into an expansion phase on the quarterly. Last time we had volatility expansion on the quarterly was nope. All this entire move was volatility to the downside. Very interesting. We only saw some slight volatility expansion right over here in April of 2020, in about late 2023. We had our initial moves from the about $24,000 area roughly to somewhere around the high $40,000 area before we got that first pullback. And we did that with momentum significantly lower than where it is now. And the similar area we had, volatility in a different area than it is now, much lower. Right now, volatility is expanding from a slightly different area. So see if I can find a comparable move. That would be not really even that one, because it was still below moving average. No, nothing really from zero volatility. All of the moves that we had from similar areas and momentum had different volatility levels. So it would be more similar to this move that we had right here. And what this was the final pump before the bear market started. Very interesting. That also goes along with the idea of one final pump with the momentum starting to flip up from this neutral zone and volatility at somewhere around these extreme lows. Let's measure how much it was. Flipped up right there. Volatility reading is right about there. So we saw another, wow, 133%. That's not bad. Looks a lot less on the chart. Let's take it from the actual volatility expansion. Oh, that was to the downside. So we had the fake out to the upside of 133%, and then a move down of about 69%. Very nice number. Right now, on this previous candle close as well on the HPDR, we closed ever so slightly over that median. And whenever you get a close that's even slight bit over the median, even by a couple of dollars over the median, that still technically gives you the closure over the median that you would have needed for confirmation to target this median for at least a reconnect on this next quarterly candle. That would give us a target of from around $164,000 to $165,000 within the next 2 months, basically on a probability basis. And remember, 61.8% chance does not mean 100% chance. some people have to be reminded this. Monthly is now doing that same idea with the quarterly, starting to flip back up with the price holding the bottom HPDR at 38.2%, and then that eventually is putting in that hidden bullish divergence that we said over the past couple of weeks. The momentum would eventually start to flip back up. Going to take out these previous lows and then put in some hidden bullish divergence, and that's what probably takes us to our new all-time highs. And right now, momentum is very likely going to switch back over this moving average with any close over about $110,617. Once that happens, you will have three drives of hidden bullish divergence. You'll have volatility expansion, and that very likely also gives you that buy signal on the jewel, which then will give you hidden bullish divergence on the jewel also, and you'll have that on the HPDR, you'll have it on the jewel, and you got it on the RSI. Got about 6 days left to go as well for this monthly candle closure. And all we really want to see is a close over this wick high, which is that $110,600 area. Once again brings up how important that $110,000 area is. This is basically our final line in the sand that we absolutely have to hold if you want to continue this run, to go up to new all-time highs without a deeper pullback first. And to be honest, if we're losing the $110,000 area, I'm going to be on the side that this is an actual crash and not a pullback or a correction. Which, to be honest, a lot of crypto people even called it bear market 80% drawdowns, pullbacks. One second, it's getting a little sippity sip. Weekly is now also right at that reset zone, still flipped up on the momentum. Weekly is also very close to putting in hidden bullish divergence. Hasn't quite done it just yet. Very, very close. And that will also likely confirm if we get any close over. It's not going to help you that much, but it's our all-time high. It's at about $123,180. What is that one? $182 basically. That will confirm the divergence and give you a target of that, an easy target of that top 38.2%. Because that would also be your target after closing twice over the median and continuing to be over the median. And that level is that $145,000 level. That will come up again as well. And right now, we also have the jewel giving us hidden bullish divergence by taking out these previous low and having the overall buy signal with the pink just about to cross back over the yellow. Very, very close to getting one of the most prime buy signals. With the light blue is right around the pink and the yellow when you do get that cross. As of right now, you haven't quite gotten the cross yet. It's still more in the bearish posturing with the pink below the yellow. But you see the light blue is now about to reclaim all of these moving averages, the yellow and the pink one, and that'll invalidate this bearish cross. And that'll more so turn it into a bullish cross, because that'll force the pink to cross back over the yellow. And then they'll all be bunched up together. One of those jewel setups pretty easily is going to take you to that 38.2%. That would be a very, very powerful setup with all of them crossing up together. That's very similar to what we had on the daily to the downside. On the weekly right now, momentum is also still positioned to the upside, freshly flipping back up over the moving average. We took out these previous lows, putting in weekly hidden bullish divergence. And volatility is very close to getting into an expansion phase, still sitting at very, very extreme lows, sitting somewhere around 3%. So the lower the time frames that you get to, that you're going to start seeing these volatility setups, that'll tell you the sooner that this move is going to happen. And it gives you, and since you have those certain levels, the sooner that as soon as this move eventually does play out, if price is still holding over that $118,000 area, that's going to make it overwhelmingly likely that this breakout and volatility expansion is going to happen to the upside. And that goes along with several of our HBDR targets after closing over the median multiple times. Like the 2 week, we have multiple closures of the median. The weekly, we already have multiple closures of the median. Right now on this weekly candle, what I want to see is a move down to somewhere around this 5 EMA and a median. Just nice reconnect with that 5 EMA and median. And then from there, I expect that to spring us towards somewhere around that 38.2%, around that $135,000 area. And the reason why right now I am still leaning towards that the upside breakout is just based off of the probabilities right now, because you do have multiple closes over the median on the weekly and the 2-week, which would give you a 61.8% chance probability of hitting that top 38.2%. So probabilities weigh heavily more in the favor of the upside as long as you're closing over that median, but you already have multiple closures up. So as of this moment, for this setup to fail to that to go into the 38.2% would be a 38.2% chance of failing. Quite low. Basically, 1 out of 3 times will it fail. Much better to bet on the 2 out of 3 that would work than versus the 1 out of 3 that would fail. Now let's go down a little bit. Let's go leads real quick. All right. 15-minute over here is trying to grind out some type of local bottom. I'm not convinced this is going to be the macro bottom yet. Just somewhere that we might get a little bit of a bounce, because we've been bouncing at this area several times now. Still not able to break this roughly $115,000-ish area, because this is the area where if you would start to break, probably even on a 4-hour close below that 115,000. About 100, I guess you could use this one to be exact. About 114,777. Once you even start to tick below that number, you wouldn't even need to wait for a close. You're very likely going to capitulate to the next support area of that $110,000, $111,000 area we've been warning about for the past couple of streams, that if we don't continue to hold that 118,000 pivotal area, we're eventually very likely going to be retesting those 110s. And as of right now, I don't know if people seem to like to hear that part where we had mentioned several times upside as long as $118,000 holds is currently not holding, but we haven't gotten the close. So the idea has not been invalidated, but it's very close to being invalidated. I'd say it's probably a formality at this point, considering we're just going down only and we're in downtrends in several of the lower to medium term time frames. Would have to start shifting to the side that we're probably going to go towards somewhere around that $110,000 to $113,000 area. And one more reason for why that area is very likely is I'll switch over to the daily and then go to CME. CME right now, let's see if we can feel the gap. That CME gap right here is right about that $115,000 area. CME does have a slight price premium over spot. Right now it's at about 116,700, and spot is sitting at around 115.5. So CME is sitting at about like a $1,200 premium over price action. If CME is trading somewhere around $114,000 to fill that gap, spot's probably trading somewhere between 112 and 113, and that's the. And I don't know about you guys, but there's a lot of people still talking about that CME gap. A lot of charts that you're seeing with arrows down to that CME gap and then straight up to new all-time highs. How easy does that seem? Probably not going to be all that simple. Comes to fill the CME gap, everyone starts to bid. You get a little bit of a bounce at that CME gap. People think they've caught the bottom. You come back to this bearish retest zone of that 116,000 area, and then you get your final dump ski to that 100 EMA, right around that $110,000 area. This is where if we start to fail below our 115s on a 5-day or 114.7 on even a tick basis, that's where we're very likely going to go towards that 110. I'm not looking at this $114,000 area as really being of much significance other than like a bearish retest bounce. Right now, the two opinions that I have is either the bottom is in or we're going to go a lot lower towards that $110,000 area. I just don't see the CME gap area holding as a macro bottom. Because even when the CME gap idea is right, they're like, oh, we're going to fill the gap and then go up, usually goes a lot below that gap. Let's switch. 12 hours. Also now firstly flipping to the downside, getting into the bearish control zone. Let's looks quite bad all around. Let's see, are we taking out? And if we get a close anywhere below about, I use this one, it's more recent, about $116,995. That'll also tell you that now you've taken out all of these lows, made a new major lower low on a closing basis. That's what also gives you that bearish retest, and then very likely towards that $110,000 area. Just a little bit more. Yeah, the idea of this being the local bottom is now basically almost been invalidated, because you don't want to see these areas getting retested too much. You want to see it bounce, put in a higher low, and then just skyrocket from there. And as of now, we're just continuing to see continuation off of these rejections of the 5 EMA. Looking a lot like this is not going to be the local bottom. Let's continue. Okay. Try and get an idea of the lower time frames of the probability of this is going to break down. Now I'm starting to seem like it's most likely going to break. We just want to see a close below this median at about 115,380. That 115 twos to 115 threes, very, very important area. Close. And that was literally just a bearish retest of that slow cross. Very, very, very obvious in hindsight. Four-hour rejection retest of that 100 EMA. Now you have a 4-hour slow cross to the downside. I promise you, there's a reason I'm going into these time frames. It's not just low time. It's not just low time frame gambling. It gives you a better idea for trend reversals. Right around this zone is where you're absolutely going to see a strong bounce, or almost certainly this is going to break down towards $110,000. And you don't see a lot of people talking about that $110,000 zone right now. You see them talking about the CME gap. Okay. A little higher. 3-day. All right. Now the other bias comes from the 3-day and the 5-day. Right now, if you see the 3-day, we had a pretty strong closure. We maintained this 5 EMA. As of right now, we are getting a clear rejection. It came very close to doing a bearish engulfing. It's a little bit more bullish that it did not do that bearish engulfing, didn't make a higher high. Right now, we are the area to look at as our main area support, where the idea comes that this could possibly be the local bottom, is that this 9 EMA is right here on the 3-day. And this 9 EMA has been the area where we've been liking to get corrections to, and then big expansions right off that 9 EMA. And until that isn't true, you would have to assume that that's going to continue to be the case, because the one time that it does fail, sure, you'll take a loss, but for all of the times where it played out like the trend said it would, you would still be out ahead if you're not going all into every single trade. You shouldn't be doing anyways. The only thing I'm not liking at this 9 EMA though is I would have liked to see a stronger bounce on the touch of it. Sure, you still got a day and 10 hours left to go, so it doesn't kill the hopium. This makes it a lot less strong that you're not getting the strong bounce from that 5 EMA, the 9 EMA. And that 3-day 9 EMA lines up with the 5-day 5 EMA. If you notice on every single one of these uptrending like busting action moves, the 5 EMA is on the 5 days what likes to be the area to bid. Usually any bid of that 5 EMA in one of these strong uptrending moves is brain dead weight of making money. Long this 5 EMA, easily get that expansion, wait for the reconnect, get a front run a little bit, expansion, you get an actual reconnect, expansion, reconnect, expansion, reconnect, expansion, You got to assume that this is just going to be a reconnecting expansion until this area is lost. And it's not going to be lost on a 5-day basis until you get a closure below about $115,400. Once again, that low to mid $115,000 area comes up once again. Two-week is now right at that median. 2 week is not going to close for another 9 days and 10 hours. And since we have gotten 2 closures over the median, that would give us probabilities of a 61.8% chance probabilities of hitting this top 38.2%. And since you have closures over that median, plus you're currently still technically resting at that median. And what is the median? It's that same $115,000 area, about $115,000, $115,200. As long as we are holding that on a closing basis, we could even wick all the way down to $109,000, $110,000. But as long as we're holding this level on a closing basis, that would still have the 61.8% chance of ending up at that 38.2%. At, what do you know? That $146,000 number that we said would come up again. Right now, the 2 week is also still pointed to the upside on momentum, with volatility now sitting at 0%. We see the 61.8% chance of hitting this 38.2%. We see multiple closures over the median. We see hidden bullish divergences present. We see major EMAs being tested on our high time frame setups. A lot of things are pointing towards the direction that the local bottom is either in or it's close. I'm starting to be of the belief that it's close and not in, but that will be confirmed once we get a loss of that 114,700 area on a tick basis, or that 115-ish area on a closing basis. And right now, the 2 week jewel is still giving us a buy signal, giving us probabilities to the upside. Now we'll switch over. $114.7. Any divergence here? Let's see. This is higher high. No, just barely escaped hidden bearish divergence. You're getting to the area where if this is going to be the local bottom, this is where you're going to see it. You still have that bullish jewel cross with the pink crossing above the yellow in the bearish control zone. So this is the area where it would need to flip back up. And we're not seeing any type of bounce whatsoever. $45 is also about to get that bullish jewel cross. Still keeps hoping alive until this area is broken. What price is this? 114,777. Down. This way we'll know live when it happens. There we go. 15-minute on that previous close on the one that we just had, confirmed bearish divergence, making it extremely unlikely that this is going to be the local bottom. Now what I'm thinking is probably going to get a bearish retest of somewhere around this zone here, around the mid 115s, and then that's very likely going to be your bearish retest. See where the 3 hours about to close. What does that tell us? An idea of a bearish retest. Simple moving average is at about 116.3. Edge of the bearish control zone is at about 115.4. Very interesting. Matches that low to mid 115s area. So we cross. We already got the retest.
So very bullish.
Oh yes, very bullish. There's still some slight possibility, very slight possibility that this could be the local bottom. I'm trying to see in the lower time frames if I'm seeing any possible bullish divergence appearing. That was invalidated, bearish. Let's see. We have taken out that low. I'm going to draw a vertical horizontal line right here to draw off the spot where I think is going to be the opportunity, and it's on to get into a short if you're not already in it. At 9 EMA. See if it lines up with any of the other time frames. This main line lines up with the 5. What's the edge of this bearish control zone? Lines up as well. Here, I'm about to give you guys another free short. All right, so after we get this 3-hour close in about, say, 9 minutes, I'd be looking for a little bit of a move. If we do see a move to the downside, tap this 200 SMA. Either way, though, I do expect this meme line to get tested, whether it's a tap of the 200 SMA first or a tap of the meme line first. Doesn't really matter. I would prefer to get the tap of the meme line first because that would be easier to short. But you wouldn't want to short. If you see a move to the downside, you don't want to chase that short. You don't want to chase unless you can get a retest of this meme line. I had a similar idea earlier where I wanted to short the loss of the 100, and then I was gonna short the retest of it. Never got the retest, just dumped straight to the 200. And if I would have chased that, it bounced massively at the 200. That's how you get liquidated. Still no bounce whatsoever. All right, let's go to the high time frames. And on the quarterly, on the RSI, we've still got 3 active drives of hidden bullish divergence. Very difficult to invalidate it right now. You would have to close below about $74,441. And invalidating that bearish divergence, hidden bullish divergence, would make this a lower high on RSI and a significantly higher and higher in price action, giving you a 3rd drive of bearish divergence on the quarterly. 3 drives of bearish divergence on the quarterly, that would have a minimum target of this bullish control zone and the simple moving average, and that level sits right now at about $86,000.
Now, I'm sorry. What's the level that you're saying that it needs to be lost?
It needs to close below 74,441.
Oh, get the fuck out of here. Got it.
Very low, very low. And that would confirm, not only would it invalidate this hidden bullish divergence, but it would put in a 3rd drive of bearish divergence. And you'd have a minimum target on that confirmation of about $86,000. But you're likely going to go a lot lower than that. That's just the minimum target.
Mm.
Bad having a little sippy sip. All right, monthly also now has that hidden bullish divergence after invalidating the regular bearish divergence, and this is once again this is the first time in Bitcoin's history where we've put in a monthly bearish divergence and put in a bear market, and then actually went to new highs from there. Very interesting. Shows you that we are working with something different than we've had in the past. It's not going to be exactly the same type of asset that to trade like it was whenever Bitcoin was one of the things that people were on Wall Street bets were talking about. Now, apparently, Bitcoin is actually a legitimate thing. Now, despite whatever Warren Buffett or one of those guys might tell you, it's a very legitimate thing that's here to stay. It's actually funny when people mention Bitcoin going to zero. I know most of the time it's a joke. It actually is kind of impossible for the price to go to zero because there is an electrical value which would keep the bottom at somewhere around at least a few $1,000s. I think last time I checked, it was like $2,000 or $3,000 of the pure electrical value. So unless all of the Bitcoin nodes and all of that shit shuts down, you would still have a value of somewhere around $2,000 to $3,000. Do you remember where we found that bottom in COVID? Right around that mid 3s.
Oh, yeah. That was a crazy pump.
And it was all thanks to Mr. Arthur Hayes, the father of crypto. Went and unplugged his exchange servers so no one would get liquidated anymore.
What a great guy.
Imagine being one of those guys that you were a couple of dollars away from your liquidation. You see the price is just nuking with absolutely no support, and you're thinking, should I cut this? Should I cut this? I'm gonna get liquidated. And then the CEO exchange unplugs the server to stop your liquidation.
That I would suck that man's dick,
Send
depending
him
on
a
how much
Ferrari.
money I have on the line.
If there's 7 figures at risk, least you could do is get that man a Rolex.
At the very least, absolutely.
On the 2-week on the RSI, still got that active hidden bullish divergence, and it's going to be active as long as you're closing below about $98,330, closing above. And you're now putting in another drive of hidden bullish divergence by taking out this low and these lows while making a significantly higher low on price. And that will be confirmed with a close over about all-time highs, 123,181. I know it's not really that helpful to tell you got to close over your all-time highs to be bullish. The more helpful factor about that is that you can get targets, which is right around that critical zone. And the critical zone right now sits at about $181,000, quite high. And now we're just about to get that volatility expansion as well at that 15%. Not confirmed, will be confirmed in about 9 days. Weekly, nothing yet. Weekly is very close to invalidating the hidden bullish divergence. It will with any close this week below about 115,739. And if that invalidates, that will give us a target of the simple moving average at about $107,000, which will continue to rise. More confluence for that 110 area. 5 days now forming hidden bearish divergence. It will regular bearish divergence, and that will be confirmed with any close below 116,195. That will give us an easy target of hitting somewhere around this 21 EMA, right around that same $107,000, $108,000 area. And this 21 will slowly continue to rise. Wouldn't that just be the most fucky thing to put in some nice new all-time highs in the beginning of the summer, then spend the rest of the summer consolidating, cooling sideways and down, and then fall we see the actual move to significantly new all-time highs? That would be a very Bitcoin thing to do, and that's what it does basically every single year too.
That fucking piece of shit.
Seems like people forget that Bitcoin loves to sideways consolidate in the summer.
Mm-hmm.
It helps you whenever you realize when it comes to most things, especially including Bitcoin, that the regular retards punting longs on their Blofin or whatever exchange are not the people who are moving the price. So on the events where the big money managers, all of the actual people who move the markets, the hedge funds, the quant firms, those are the people who are not working. Since they're not working in the summer, it makes sense the price is not going to move much because their dollars are the ones that are actually moving the price. People like to think, when we get together as retail and we buy and we don't sell, we can.
It's so funny. Yeah.
We can keep the hedge funds from dumping the price. They can't sell it. They can't sell it if they don't buy it from you. Well, actually, sir, they can sell paper Bitcoins and as many of them as they want. That was the whole thing with BlackRock and Coinbase, is that they weren't really getting real Bitcoins. They were getting paper IOUs.
Yeah, but you tell people in the Bitcoin community is fucking hilarious. Like, absolutely hilarious. They're one of my favorite little parrots that repeat the same things over and over again. One of them says something and the other ones are repeat the same fucking idiotic thing. It's so funny.
It's similar behavior you see all throughout anything. Bitcoin, Tesla, whatever you want to call it.
Oh my God, yeah. I couldn't agree more. Yes, of course. I mean, it's not investing in something is not a weird phenomenon.
Yeah. At the end of the day, this is why TA even works, is because buying and selling anything just comes down to human greed and fear.
Yep.
Literally just that. It sounds cliche whenever you tell people who are not actually, who don't trade or who don't do anything in the markets, like, oh, you just buy the fear, sell the greed. That
Yeah.
sounds quite easy to do. It sounds like one of those things where you tell people, you're homeless, just buy a house, but it's not actually that stupid. It just sounds.
Yeah. But it's also really hard, honestly, for most people to do that.
Yeah, because they themselves are scared
Yeah,
or
that's what I'm
greedy.
saying. It's that simple, but it's not simple to do.
Yeah, the more the thing that most people are not able to do, which we've done on stream multiple times, is that something if something agrees with you a little too much, a little too perfect, there should be a little caveat in there where, hey, maybe because this is too obvious, it's not going to work. Well,
Yeah,
other people don't seem to think that, because they think, I see this, no way anybody else sees it. I'm a genius. Nobody else can see this.
yeah, yep.
E-
That's
e- Every everyone who is new into TA think that for some reason they're the only ones that can do it.
always. But that's by the way, that's again just like you said on investing on every asset. That's on everything. Everyone thinks they can watch a 5-minute segment on cars, and now they're experts and they can tell us that FSD is not never going to work, and you know, and it applies on the same for everything,
Oh,
basically.
they just read one single article from Gizmodo or The Verge, and who tell them that here's why it'll never work. Here's why the
Yeah,
Cybertruck will never be built.
yeah, and then that's it. They're experts. They know that, and they're the only ones that know that because they read something and they told them how to think.
And
It's
then
fucking
whenever you have
crazy.
the audacity to say your opinion online, people are like, well, sir, did you see what this expert said?
My favorite still that people talk to me in the car world like they a single one of them knows anything compared to what I know. When I fucking I'm not even gonna say it. Fucking it's the most ridiculous thing to argue
But
online
but,
about
but
that.
sir, we have a great deal. You can get this brand new Rolls Royce Spectre for only 250,000 over. Special deal just for you.
Just for me. I'll take it. Thank you.
Let's see. I think we're gonna get that bearish retest.
Yeah.
That area is about 115.5. Okay. All right. Switch over just a little bit lower. Degenerate one more time. Trying to make sure that this entry that I gave you guys is solid, or I'll cut it out. Getting over the 5 now, so it does for the first time. So very likely that gives you that move to that meme line right at the 21. It would be a retest of this bottom before we got the lower high. Makes a lot of sense. Are we putting any bullish divergence? Yeah, 15-minute bullish divergence. It lines up. What is this level? 115. Let's see what it is on bluffing. $115.5. Let's front run it slightly at 115.4. Yeah, I'd say that would probably be better. $100 is not really going to make the biggest difference versus getting front run. What is this wick low? 115,467. So let's say 115,500. You don't really need to be exact. As long as you catch the meat of the move, that's really what matters. Worrying about trying to catch the to the dollar entry, unless you're using extremely high leverage, you're more likely to get front run. But if you're using very, very high leverage, then you're going to need to get the entry perfect, or else you get liquidated or top.
Yeah.
5. Let's do, what is that, 400? 115, 400. Let me write that down so I can post it. There we go. Made it as a note to post later on the website. And even the EMA rules would give you, based off of that loss of the 100, bearish retest of the 100, textbook definition, a target of that 200. And this would be that bounce for that CME gap. Very likely you get that slight bounce from this 200 zone, somewhere up to this this week high consolidation zone, somewhat consolidation right here, towards maybe this wick high at around like 150 to 160. That's a very, very, very tradable bounce as well. If you were to take this long from here at this 112, stop loss down here at about 110, 110.5, because at the very least you're going to get minimum a little bit of a bounce from this zone. Whether you're bullish or bearish, hitting that 4-hour 200 is going to give you some type of a reaction. If you want to catch that that quick scalp long, you can. I probably wouldn't be aiming for that. I'd more be looking for cutting my short at this point and trying to short again higher, somewhere around that 115 to 116 area, because there is a decent chance that this could be the local bottom, and the people could be right about that CME gap fill. And you don't want to get fucked holding trying to short whenever you're getting your bounce to all-time highs. Divergences. 4 hours got multiple. Look like multiple. One drive of hidden bearish divergence that will be active as long as you're closing below about 116,775. And your next target on that divergence is going to be the critical zone, which right now sits at about $110,000. I'd love to see that. 4-hour jewel is now giving you a very fucking epic sell signal. You have the pink crossing below the yellow, dark blue below everything else, and this is all bunched up. Only thing that would make this jewel setup more perfect is if it was happening above the bullish control zone, but it's still not happening quite anywhere low. So this is still going to produce some powerful results. Right now, since that jewel cross, we are down about 3.5%. See what we got from the last jewel cross, similar to that. This was higher, so it's going to be a little more powerful. About the same move, actually, mid threes. Interesting. And that move of the mid threes took us to not new highs, but nice bounce. Very tradable bounce. That was how much of a bounce? About 4%. So if we take this 3.5% that we've lost so far, let's take about 3 or 4% here. Give us an idea of what that bounce rate would be if it bounced the same. Probably not going to, though, because the first lower high is usually the bigger bounce. That puts us at about 118. I wonder what this silver cross puts us at. It's about 2%. And this area is about roughly 1.5%. All right, here's where it now starts to get very interesting. Daily is putting in a drive of hidden bearish divergence now. Zoom in. I hate it whenever I click on the lines instead of the RSI. It's so annoying. Daily is now putting in a regular drive of bearish divergence. And it's putting in from a high of about, your shooting star high of 119,817 versus your high of about 120,029. So that is very, 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 very small higher high. That's a higher high of 119.8 to 120. It's like $200. So it's a very insignificant drive of bearish divergence, but it is bearish divergence nonetheless. And that confirmation with a close below about $117,000 would give us a target of hitting somewhere around this 55 EMA, which is going to slowly rise. But what number does that look to be at? Right about $110,000. Very interesting. And now we see this bearish divergence forming with volatility at 2 periods of 0%. Gives you a little bit of bias that the large move we're going to see very soon could really actually possibly be to the downside. As long as this daily has that bearish divergence and volatility at these lows, with the jewel signal flipping pink below the yellow within the bearish control zone, that's a very, very bearish signal. This all of this put together put the odds, in my opinion, a little bit more in the favor of getting that breakdown towards about $110,000. I would have been.
You kind of also got a little blow off top situation with Solana, for example, and all the alts. And I told you, like yesterday, we were talking about it on the private class with the boys, but we were saying that euphoria was like, it felt like that, like it's a mini euphoria versus 2020, obviously 2021, but it felt like that. You know what I mean? So I also think that's the case.
It'll be very interesting. Maybe we don't get that bounce from 110. You just get a bearish retest and just go straight to 74K from there.
That'd be fucking wild.
Literally, nobody I've seen has said that the cycle top is definitely in, and we're going to $74,000 next. If people, well, I'm sure no one is brave enough to say that, because if they're wrong, they're going to get crucified.
Absolutely.
You can be wrong on the upside targets and nobody will care. But if you're wrong on the downside targets, they'll never let you forget.
Oh, really? I wouldn't know anything about that, except I have a guy that just won't stop fucking choking on my dick every day on my comments, reminding me that I fucked up by like $5,000 on the bottom of Bitcoin in 2022. Incredible.
They don't care whenever you're wrong to the upside, because your upside targets make them happy with their bags.
Yeah, of course. That's why that's why there's the incentive for everyone to be bullish on all YouTube channels, right?
Yeah. If you're even in the slightest bearish, they take it as, I want your investment to fail.
Yeah. Terrible.
And no matter how many times you say I don't give a shit about these altcoins, these dog shit coins, I don't even buy them, I don't care if they go up or down, they still will say it. Take it as, I want your shit coin to fail. I hope you're poor. When the opposite should be taken. Sir,
Yeah.
I'm presenting a counterpoint. Maybe you didn't see this. Maybe you can save some money.
Nope. That doesn't work like that.
Absolutely not. Because they wouldn't do it for you, so they couldn't fathom it in return. See, 2-day, no divergence. 2-day is also forming that God mode sell signal. Three days invalidating the divergence. 5-day. Ooh, 5-day is now putting in a drive of bearish divergence. That's not looking good. And it will confirm with any close below 116, 114. That's going to give us a minimum target of somewhere around that 110 to possibly 109 zone. 5-day. 5-day 9 also goes along with the CME gap fill area, also giving more of a reason that we'd be likely to get at the very least a temporary bounce at that 113 zone. Now you're getting volatility expansion on the 5-day with that bearish divergence approaching. Puts it a lot more on the side that this one could fire off to the downside. I would want to see the bearish divergence confirmed first and the loss of that 5 EMA. Then I'll be a lot more comfortable saying that, all right, we're getting this set up to the downside. Right now, it's not in favor of the bulls by any stretch of the imagination. Not bullish to see bearish divergence appear with volatility expansion and the jewel starting to flip over on many time frames. You don't see that type of jewel flip over on a consolidation before new highs. Momentum. Fuck, I'm all out of. Momentum, low time frames.
There it is.
Let's see if we get this move.
Well, George Russell got eliminated from Q2. Excellent. Excellent, Mercedes.
Who?
Mercedes Formula One. God damn it. Had an
I feel-
Alpine going to Q3.
I feel
Fuck
very-
me, right?
I feel very ignorant in these matters.
Well, don't worry. I'm just yelling at the fucking TV like an old man. I'm not. Fuck.
All right, so the short that I just gave out, the entries are starting to get hit, starting to be filled. If you are going to take this short, I would put your stop loss right over here at this wick high. This would be if you want to do an aggressive stop loss on higher leverage at about 116,798. If you want to use lower leverage and want to like make sure to try to escape liquidity grabs, you could use this wick high over here, which is at about 119,540. This is a wider stop. This is the only relevant stop if you're using low leverage. You're using somewhere around like maybe a 5 or a 10x, which if you were to tell anybody else would say is insane leverage as it is, but for us crypto people, 10x is pretty tricky low. And if it does hit from here, anywhere from the entry zone, from about this zone to this zone here, your risk is what? In the widest stop, your risk is 3%, versus you're looking for 110 to the downside. It's about like close to 5%. Not quite 2 to 1, but not the worst. This is more so if you're itching to chase the short that's already started to play out. Slow. 30-minute momentum is still strongly to the downside, putting it even less of a chance that this local bottom is going to hold over time. Still pointed down to the double derp of death as long as you're closing below 116,250. Hourly is currently freshly positioned to the upside. It's still within the bearish control zone. It would need about 1, probably 2 at the very least more closes before this can exit the bearish control zone. And at that point, I'm of the bias that this pivot is going to go up. Two hours also now starting to flip up. It will be flipped up as long as you're closing over about $115,100. Also still within the bearish control zone. Not putting in any possible divergence by making a lower low on momentum with a lower low on price. To even have a possible bullish divergence on the 2-hour right now, price would have to make a lower low while momentum made a higher low. So even for that bullish scenario to come out, we'd have to make a lower low on price. That's a good way that you can tell what could potentially be a bottom, is if you start to see lower lows on price and you start to see higher lows on your momentum. That'll tell you that, not confirmed, but there is a possibility of a reversal there. Since you don't have that, no chance of reversal, because you're just making lower lows. And on the 4-hour, you're going to be pointed down as long as you're closing below $117,700. Cross. Has this technically confirmed? More or less. Basically a confirmation, in my opinion, at this point of this confirmation of this silver cross, because you would need to close this candle in 41 minutes over about $117,900 to avoid that cross. So 40 minutes, we got to see a $2,500 pump. Let's see. I say that, and then news will come out that Trump's investment fund or some shit has bought millions of dollars of Bitcoin, and then it'll just green dildo up from there.
Michael Saylor just bought another little top, no? Like not that long ago, like a few days ago.
I didn't see.
He could have just waited 3 days.
Well,
And by the way, they already found like what Like, you know how people always have to find the why is Bitcoin dumping? That's what everyone asks, right? Like you're gonna get an actual like a hard answer, and people are already running with the hard answer of oh, it's a private person that is selling 30,000 bitcoins
But if
through an
it's a
exchange.
private, but if you do an exchange, then how are they a private person?
Well, it's a private person giving it to the exchange for the exchange to get rid of them.
They, can't they just track the wallets to whatever funded that wallet?
Farhan. I'm not the one telling you what the story really is. I'm telling you what they believe.
Oh, I understand. I always wonder with stuff like that. I'm like, bro, it's crypto. It's the one thing that people can't bullshit you with.
It's insane, dude. But people are. It's insane. It's insane.
This is the reason why I don't take any forex influencers seriously, because you can't. It's impossible to verify their trades, and we already know how 99.9% of these dudes are scammers. So if you can't verify their trades, yeah, I'm out.
Yeah.
People's defense is, oh, but they posted it live. They posted the trades before it went through. Doesn't really matter if you're on a demo account, because it's much different thing to post a real trade that you're actually risking your money in, versus, hey, look at this setup. I'm not risking any money in here, but look, it played out.
Yeah, what a life, those guys.
I wish we could do that. But the forex people are a special type of retarded, so it's easy to fool them.
I don't say that about forex people. Come on, guys. I'm watching. By the way, I'm watching qualifying too with Alejandro. What is this for? How does this work? Like, why are the cars going so fast and not like racing each other?
Oh, Scott, I can't start explaining to you how qualifying works in Formula One. Enjoy your seat at McLaren.
All right. Thank you, boys. All right. See you later. Tailwinds.
Those are the dudes that I usually drink with when I go to the Formula One races. Because 75% of the time, when I'm at the race, I'm just getting the free alcohol and the food. I'm not really watching the race.
Yeah. The going to me, going to the races is not that great, because mostly it's people that really are just there to party, and you can't see the race.
Yeah, a lot of the people that are within my vicinity, I don't really think they care for the race either.
Yeah.
And that's why I would basically almost never buy those pit lane tickets unless they bring me in there for free.
No, yeah, it's too much money. Yeah, they're now like the Vegas ones are 30 grand.
Yeah, fuck that.
A ticket. Yeah.
I'll buy myself a new Rolex.
Yeah, exactly. So stupid.
Okay. All right. Sorry to somewhat give you bounce signals right now. Although I think this is just going to be the bearish retest for that short entry. You're getting 10 minutes starting to flip up. Is it any divergence? Nope, no bullish divergence even on the 10-minute. And you're going to be pointed up as long as you're closing over $115,000. So basically, the idea is, once you lose $115,000 on a closing basis, it's fine. Let's see, get some more ideas for bearish retest. 3 out of 5 at about 115.8. So on the high time frames, Bitcoin's still looking a little quite bullish. It's only on the medium time frames we're starting to shift over into some more cautious posturing. Not exactly bearish, just more cautious, more reducing your exposure for volatility, whether it's going to be to the upside or the downside. Right now, we are very close to having some big volatility. And if you're heavily positioned, something that you should take note of, because it's right now still based on the higher time frames, a slightly more bias to break out to the upside. But now in these lower time frames, you are starting to get some very worrying signals, and you don't want to make it possible to where like this setup doesn't work out and that destroys you, because nothing is going to be 100% forever. Sure, monthly setup right now does have a 100% hit rate of going out in terms of direction, Sure, it's unlikely to be invalidated, but it's not always going to be 100%. Every one of these previous setups was previously 100% before they started to fail. And the more data, the more history of an asset that Bitcoin becomes, the more that those setups are going to fail. It's only whenever Bitcoin was freshly trading that all of the easy setups and the textbook setups would work, where you would get your clean back tests, you would get your clean divergences, you would get your RSI targets always met. It doesn't do that type of stuff anymore. Bitcoin has become significantly more difficult to trade.
Bad Bitcoin, no.
It used to be so simple. With on a high time frame, if you were in a weekly downtrend, all you would have to do is just short the 9 EMA on the weekly every single time, blindly short the 9 EMA, and in the uptrend on the weekly, you just long the 9 EMA on the
Buy
weekly.
it. Yeah.
Pretty brain dead. Monthly, like I mentioned before, it does have that confirmed volatility set up, which confirmed last month. Volatility expanding above that 15%, and we put in hidden bullish divergence on the monthly, and we are going to be pointed up as long as we're closing over about $103,450. This is the main setup that's driving the majority of my bias right now, because I am more so assuming that this is going to eventually play out, like it has in the past, and I am not going to bet on that first failure just yet. I'm prepared for it based on the low time frames, starting to get a little cautious and opening to the possibility that it very likely could be a failure, but I'm not going to front run the failure. I'm going to wait until the confirmation. Because there's been a lot of times when this monthly starts to go, the monthly and the 5-day setup start to get very fucky. It starts to give you the expansion to the downside. You don't get the confirmation, and then you get the real expansion to the upside. Very likely also that it could do that move, where you get a quick crash to somewhere around the low 100s, and that gets bought up real quick, and that shoots you up to new all-time highs. I'm not erasing the possibility of that happening. I'm not erasing the possibility of the local top being in. I just want to see the closures above or below those certain levels. 2 week is now also giving that volatility setup, getting above the 15%. In about 9 days, this will confirm. And as of right now, we are pointed to the upside. We will flip down in about 9 days and 9 hours if you can close below about $118,600. That's what gives slight bias in favor of the bulls, that the momentum is still pointed up. Once this flips down, that's going to solidify my theory that we're going to get a deeper pullback. And I'm going to be looking at about 110 to 111 at a minimum. Weekly also a position to the downside. Volatility is almost fully contracted. Weekly will flip up in about 2 days if we can close over about $115,000. 115, very important area. Let's see what I put in divergence. Zoom in a little bit. Would potentially put in some hidden bullish divergence, not much by taking out these lows. Five day is also positioned now to the downside, flip down on the last close, with that 5-day volatility expansion going off below the 15%, now above the 15%. What momentum is pointed down. Probabilities now are that the setup will play out to the downside. And if we take one of the previous setups to the downside and measure how much of a move we had from the expansion. Let's see, where do we get expansion? This one gave us the expansion. That was a move down of about 19-ish%. So let's take it from this volatility expansion and bring it down 20%. This wasn't a full volatility expansion. It only really took us to about 50%. Let's take that from the expansion.
would be 100 grand basically.
Yeah, right around that 100,000. Very interesting. Oh, it comes right down to my meme line. Huh. Meme line 55 EMA. Although I do think if we dip below $100,000 again, I don't see it going
Shit's
back
good.
to all-time highs.
Yeah.
Two-day now also flipping to the downside. Two-day is now invalidating that two-day setup with momentum starting to contract, and we will be pointed down as long as we're closing below $120,500. 5-day also freshly pointed to the downside, rejecting the bullish control zone, with volatility now at 2 periods of 0% and just about to start expansion. Along with the loss of that daily 21 EMA, which this 21 has been our support all the way through. Losing that 21 EMA would give you that move down to that 55, although I did think we were going to go below the 55 to tap that 110, 109 place right here. This previous zone of consolidation. And we're already kind of getting that Bart Simpson pattern right now. Kind of told you when we were chopping right here that there was a real possibility of a downside move. And for the people wanting who were wanting to and still wanting to bid that daily 21 EMA, the reason I don't think that's the spot is because it was the spot, it would spring off of it.
Yeah, like basically the 34 below. Which one's the white one that you have?
The 100.
The 100. Like just like how when he tapped the 100 and he just like bounced.
Yeah, strong bounce right off.
Mm-hmm.
That's what we should have seen at this 21. Still positioned to the downside in the 4 hours, as long as you're below about 117,700. Two hours also now flipped up, as long as you're over 115.1. Hourly is now approaching that zone of the bearish retest consolidation zone, right around that high 115s area. Hourly momentum is also freshly flipped up. It's actually flipped to the downside. Very interesting. And it will flip up if you can close above about 115,600. We're dancing right at that area right now. If this hourly does flip up, I would cancel that short and aim to short it a little bit higher, closer to the stop loss. Let's see if this one closed. Not yet. Trying to see if any major EMAs have been reclaimed in the low time frames. 30 minutes, still rejection of that 5, still pointed down. 15 minute is the only one that's reclaimed the 5, and we got just got a nice rejection from the 9. 115.1, and now the pivot is not very far away. Come on, bears, dump it. I do think it's more significant, though, that the 30 minute did continue to reject the 5. One last run through of the low time frames. This is doing one of those, in my opinion, traps where it makes a low, makes a quick dump. Everyone thinks the higher low is in, but as long as we're below,
fuck you. Mm-hmm.
Yeah, as long as we are below this 117, 118 area, it's just the area for a bearish retest. As high as at about 116,789. All right, so all of the high time frames are still leaning to me that we will eventually get the breakout in all-time highs. If not now, then sometime this year. And on the low time frames, it is starting to look very, very concerning, starting to flip more over into the bullish side, especially since you're forming hidden bearish, regular bearish divergences on a lot of your medium-term time frames, including the 5-day. Daily is now forming bearish divergence. You have 2 periods of 0% volatility. You've already approached very significant levels of support where a lot of people were having their bids. I was even thinking of bidding that area. Ended up canceling because we did not see the type of bounce that you would have liked to see on one of those support areas. You would want to see a very quick buyback, and then you'd want to see that candle turn into a big wick, and that would take half the time you get a retest of that wick, half the time you don't. But you want to see after that wick, you want to see expansion to the upside. And not only did we not get the wick, we're not really even getting much of a bounce, telling me that this is not the area of support that you would want to bid. You would either want to wait for this area to bounce back above your win 18 confirmation, or you would want to wait for the confirmed rejection, and then you can continue to short towards that $110,000 area. And there's no guarantee that $110,000 area is going to hold. It's just the area where we could put in our next higher low if the monthly setup is still going to play out and we're still going to be in an upwards market this year on crypto. You start to lose that area though, and then you should not only keep that short open, you should probably turn it into a swing and start to set some pretty pretty stink bids down below. That's what they call them on Cryptoverse. The stink bids, the bids that are very stinky because the prices are so low that people would make fun of you for saying them. When price was trading at about $123,000, if you told somebody you wanted to bid 109, 110, they would have told you have fun staying poor. Monthly also now aligned with that quarterly. Monthly and the quarterly are still in heavy bullish posturing. The monthly and the quarterly are what mainly is driving my overall bias. I did shift my shorter term bias around to the more bearish side because the data did change, and we now have gotten some rejections. We've lost the $118,000 area, and now we're forming bearish divergences on the daily, the 5-day. We're getting all of our momentum starting to flip down. Only on the extremely low time frames is the momentum even starts slightly flipping up, which more likely will just give you a bearish retest unless you get a 4-hour close back above $118,000. Unless that happens, I'm just looking for any one of these bounces to be a bearish retest. And I kind of think that daily volatility setup is going to apply to the downside of that bearish divergence. Confirmation is going to be the confirmation of that bearish divergence. And that, in my opinion, is going to be taking us minimum towards that 109, 110 area. And I think that area, because I think the CME gap area is going to be front run. I think that's going to be trapped lowering a bunch of people on long on a small bounce. And then that'll likely be a bearish retest into a mega nuke. If my bias holds out true with the monthly and the longer term setups, that 110 area will be the dump that nobody wants to buy, and that will be the one that pumps us probably up to about $140,000 or $150,000. And the invalidation is either getting a tick below about 98,330 or a weekly close below about.
I would say 103 shit.
I use 105. A weekly close below 105, and it's probably time to wrap it up. And we're very likely going to be revisiting under 100 at a minimum. At that point, we went to $120,000. We're 50% down at $180,000. We're forming multiple drives of bearish divergence on the higher time frames, especially the monthly, the quarterly. I think it'd be kind of retarded to not say that we're in a bear market at that point.
Indeed.
But the only worrying signs of concern right now are on those lower time frames, basically around that daily bearish divergence and the 2-day momentum flipping down, and all of the lower time frames momentum flipping down.
In the 5-day.
There is a possibility right now that the local bottom could be in. It's just a very, very low possibility. And the confirmation will not happen until you get a 4-hour close over about 118. Let me the exact number, $118,630. If you can get even one 4-hour close above that area, I'm going to be going max long for new all-time highs, somewhere around that $125 to $127,000 zone. But as of right now, I'm just waiting for the confirmation. I'm thinking that we're going to get the bearish retest, and I'm planning to just short that bearish retest. If I get stopped, oh well, easily flip long. But I think short term, slight bearishness, medium term consolidation, and then medium long term towards somewhere around fall to end of year, I think we will be hitting significantly new all-time highs. But I'm going to make sure to throw that caveat in there, as long as those certain levels hold. Because
Yeah.
I don't know if people remember from the last stream where I said we're bullish as long as bullish in the immediate term as long as $118,000 holds. I don't think people heard that part, but I said it multiple times. Same thing now. Bullish in the long term throughout this year, as long as that $100 to $109,000 area holds. You lose 105. I mean 105. You lose 105,000 on a weekly closing basis, or you go below 98,330 on a tick basis, and then I'm throwing all of that bullishness out the window, and I reserve the right to change my opinion with different data.
No. Just because new data is presented, you can't change your opinion. That's what idiots do, according to everyone.
Yeah, it's not the idiot who has the same opinion whether it's losing money or not.
Yeah, no. It's different. It's different here. Trust me, I know what I'm talking about. Alrighty. So right after this, let's fucking put some speed on this shit. LXHL or IXHI. Not entirely sure. It looks like an L, but LXHL.
This is the one that we did last time.
Yeah. And Coinbase right after.
I'll do Coinbase.
Alrighty. Vale, vamos a empezar, damas y caballeros, tenemos Bitcoin, voy a hacer esto lo más rápido posible, teníamos que analizar todo esto para ver si esto ya se había cocinado o no. Estamos viendo la mensual, ¿por qué? Porque cuando estamos viendo nuestra vela mensual podemos ver un poco ese delicioso estilo de tomada de liquidez aquí arriba, y la pregunta es, ¿se acabó la fiesta? ¿Nos vamos para abajo? ¿Todo el mundo está friqueándose? ¿Qué pasó con mi alt season que ya me habían prometido 39 mil millones de veces? Bueno, vamos a aclarar todo esto. Para empezar, Bitcoin en temporalidades altas, para hacerles el pedo bastante leve a todos ustedes. Bitcoin en temporalidades altas como la trimestral, la mensual y arriba de 2 semanas. Continúa en postura alcista, con divergencias alcistas todavía jugando, con volatilidad expandiendo con ello y momentum apuntando para arriba. Bien, estamos ya en la de abajo de la semana, por ahí de 5 días, 2 días, 3 días diaria, y aparte temporalidades más cortas somos bajistas. Y la razón por qué es pues, por la corrección que están viendo ahorita. La pregunta es, ¿esta es una simple corrección y vamos a explotar a la alza? ¿O vamos a ¿cómo se dice? ¿O vamos a literalmente se acabó el mercado alcista y vamos para abajo? Es la pregunta del millón. Por ahora, ahí les va. Estamos justamente en $115,000. Esta línea la había puesto, me parece que ayer, porque esta es mi zona de breakout, si no estoy equivocado, exactamente por esto. Donde yo esperaría el retroceso y junto con el promedio del 9, no me acuerdo si lo dije ayer o no. Antes de esto, déjenme les enseño algo rápido. Normalmente, y ustedes se la saben, ¿cómo le llamamos a estos deliciosos patrones, no? Si pongo una línea meme por acá, podemos ver claramente que tenemos este delicioso cup and handle, ¿no? Que está pasando por acá. Y ahí les va lo cabrón. Ayer lo hicimos en la clase privada, ¿no? Creo que ya lo había puesto acá, pero no estoy seguro. Tenemos esto, que es el movimiento medido, hasta acá. No, discúlpenme. Esta madre la habíamos puesto en la mensual aquí arriba. ¿O no? No voy a dejarlo en paz. Ayer no me acuerdo cómo lo hice. Ya ven, la cruda. Ok, da igual. Estamos en estos $115,000 trimestralmente hablando, altos más altos, todo bien. Vamos a poner el HPDR para darnos una buena idea de dónde estamos parados en este momento en estas temporalidades. Me gustan las temporalidades altas para hacer trades y no tanto como la trimestral, porque una oportunidad de estas no ocurre tanto tiempo, pero me gusta las 5 días, semanal, 2 semanas para no estar en la computadora todo el día, pero toman muchísimo tiempo. En esto tenemos todavía nuestra media en los $164,000 y la parte baja de la zona azul en los $80,297, que es la zona donde esperarías que aguantara si llega a haber una corrección. De no aguantar y venirte para acá, se vería bastante negativa la cosa. Vamos a la mensual. Mensual tenemos nuestra media en los 145, tenemos nuestro promedio del 9 en los 102, 680 y tantos, 689. Y tenemos nuestra parte baja, esa es la parte baja de la zona azul, y el promedio del 9 está en los 97, 863. Estamos justamente entrando en la zona azul, por ende deberíamos en 6 días y 9 horas tener más probabilidades de venir a buscar la parte alta de la media, la parte de la media en los 146 que la parte baja, pero vamos a ver cómo se da esto. Aquí, 2 semanas, tienes volatilidad en expansión. Esto va a confirmar en 9 días y 9 horas, todavía falta. Estamos justamente por encima de la media, perdiendo los 115, 164 es donde se pone interesante la cosa. Porque si no te aguanta la línea meme acá en los 111, tienes una gran probabilidad de continuar a la baja. Y ahorita les voy a dar los niveles. De perder los 115 básicamente planos, tu siguiente nivel deberían de ser los 104, 297. Y si esta expansión se llega a dar, recuerden, estas expansiones son en la de 2 semanas de más o menos 50, 60%. Entonces, la mitad de 115, ¿cuánto es? 15 son 7.5. Básicamente $60,000 es a donde se iría esta cosa, un poco más abajo de eso. Si es que se llegara a dar con toda la fuerza, tienes expansión completa, etcétera. Así que tenemos que poner atención. Pero del lado contrario, 50% sobre 115 nos llevaría a esos $164,000 que vemos una y otra vez. Aquí la parte alta de la zona azul son $146,000. Vamos a la semanal, damas y caballeros. Semanal también estamos teniendo nuestro SERP de volatilidad, donde está entrando la volatilidad por debajo del 15%, preparando otro movimiento agresivo. Por ahora estamos por encima de la media. Tenemos una vela topera. Vela topera, y ahorita por este momento, siempre y cuando cerremos tal cual como estamos en los 115, 400, da más posibilidades de ir a la baja que ir a buscar la parte alta en los $135,000. Este es algo importante que checar, porque esta vela topera normalmente no perdona, y no hemos visto una en todos estos topes de acá, ni una sola. Una sola. Donde vamos a ver si acá vimos vela topera y fue básicamente, nos dio la vela topera, no nos dio confirmación. Cuando nos dio confirmación fue esta vela y de ahí cayó. Y en el ciclo antes, no. Así que esta vela topera de 2 semanas, básicamente una vez que fue rota a la baja, dio seguimiento. Así que voy a tener un ojo muy grande acá para ver si va a haber seguimiento o no. Recuerda que para poder medir si una vela topera va a ser activada o no, es dentro de 7 cierres, el precio tiene que cerrar por debajo del mínimo de la parte más baja que haya tocado esta vela. Si cierras tal cual como estás ahorita, que es abajo de la línea amarilla, esto daría confirmación y probablemente seguimiento. Y aquí es donde yo estaría un poco más preocupado si es que soy alcista en esta madre. 5 días estamos por encima de la media, encima del promedio del 9, y podríamos venir a retestearlos, que irónicamente justamente están donde está nuestra línea meme por acá en los 111,700 y el promedio del 9 en los 112,250. Esta es la zona que nosotros esperamos sea la zona para encontrar este rebote a la alza, que todo el mundo ya que lleguemos acá diga, ya valió verga todo, vámonos, se acabó. Y aquí encontremos ese rebote y nos vayamos a máximos históricos otra vez. De no rebotar acá es donde empezamos a ponernos en peligro. Tienes los 106,000 que vienen en camino, y ya una vez que estés por ahí abajo de los 105,000 en un cierre semanal, para nosotros este mercado alcista se acabó. Pero por ahora continuamos siendo alcistas hasta que nos pruebe lo contrario. Vamos a la de 3 días. Perdón. Tengo que arreglar mi mouse. No le encuentro como el sabor perfecto a los settings. 3 días estamos justamente rebotando en el promedio del 9. Va a ser muy importante poder mantener los 115,000, porque son 114,900 justo acá. Si pierdes esto, el mínimo que ya hizo esta vela en 3 días, esto te va a llevar mínimo a la media, y la media está en los 111, o al promedio del 21, que es tu última chance de salvación, en los 110. Si no aguanta los 110, 106 me sigue apareciendo una y otra vez, que sería como el límite. Por abajo de eso se cocina. Por acá esperaríamos esto, por acá esperaríamos esto, y por debajo de esos niveles esperaríamos esto, para dejarlo claro. Vamos a la diaria. Diaria tiene un setup de volatilidad a punto de expandir un segundo, para que lo puedan ver, bajo 2 periodos de nula volatilidad y continúa por debajo, está en 5.16%. Estamos justamente en la parte baja de la zona azul y de no aguantar, vamos a ir al 34, que se encuentra en los 113,670 y de ahí al 61.8%, que tiene cara que va, tiene mucha cara de que esto va a venir por acá, en los 111,700. Déjenme quito el HPDR, se las pongo bastante sencilla a todos ustedes. Y antes de, bueno, no, cerremos este y después le damos más. ¿Qué es lo que estamos viendo por ahora? Vela topera, follow through. Básicamente esto funcionó, por cierto. Y ahora, ¿qué es lo que tenemos que ver? Esta fue nuestra zona importante de antes de breakout, ¿ok? Y esta zona importante de breakout que tuvimos antes, que es por esto, por esta resistencia y después debería volverse soporte. Esto mínimo debería venir acá y rebotar. No sé si a altos históricos, pero debería rebotar. Y tal vez cree un alto más bajo y empiece a jugar este pendejo juego todo el verano. Sería muy posible. Pero mínimo lo que estamos viendo hasta ahora es lo siguiente. Si Bitcoin pierde básicamente los 115,000, 111,000, 112,000 sería el siguiente nivel, que es esta línea meme. De que no aguante estos 112,000, el 106,000 va a ser tu última zona de soporte. Esta es la zona de agárrate o a la chingada. Porque si llegas a perder esto y empiezas a cerrar semanalmente abajo de $105,000, esto se vuelve todo negativo. O sea, ya tocamos tope y ya tuvimos nuestro blow up top, la vela mensual se volvería una vela topera, etcétera. Pero por ahora, esto es lo que tienes que estar pendiente de. ¿Qué nos cambiaría de opinión? En la de 4 horas, para ser muy alcistas en corto temporalidad, porque este cruce plateado está a punto de darse también a la baja. Lo que necesitas ver es un cierre para volverte alcista hoy. En la de 4 horas, que es el gráfico en el que estamos, tienes que cerrar por encima de $118,000. Básicamente acá. Y la vela está acá. Para que tengas una idea de qué es lo que estamos buscando. Entonces, una vez más, Bitcoin en altas temporalidades continúa siendo alcista, en temporalidades más cortas está volteando y puede dar una reversa. La posibilidad de la reversa se empieza a dar una vez que perdamos los $110,000, después los 106,000. 106,000 es la línea en la arena. Abajo de 106,000 todo empieza a verse muy negativo. Cierre semanal por debajo de 105. Se acabó, ya vimos el tope del ciclo. Y también podría ser un Wiccazo a los 98. Wiccazo a los 98 también sería, ya vimos el tope de este ciclo y nos vamos a nuestro mercado bajista. Pero por ahora esto nos debería de llevar, una vez más, a menos de que no aguantemos, a una corrección para después ir a altos históricos después en este año. Ahí está. ¿Quieres volverte alcista y que todo esto esté mal? Simplemente tienes que ver el gráfico cerrar en la de 4 horas por encima de los $118,000. Estando por encima de los $118,000, todo lo que dijimos se acabó. Esta fue un SFP. Esto cerró y el problema es ese, que tienes 1, 2. La tercera vela, hija de puta, fue a tocar el promedio del 100 y volvió a caer. Empiezas a acumular cierres por debajo del promedio del 100 y esto te lleva naturalmente al 200, que está en los 112,000. Así que pendientes por acá ante estas caídas, mis estimados. Lo de la vela topera no es de 3 cierres en lugar de 7 cierres. No, Leo. Acuérdate, confirmaciones son 3 cierres, es lo que pregunta Leo. Es lo que pregunta Leo en el chat. Y la duda es cierres. Acuérdate, cuando buscamos cierres, 3 cierres es por encima de algo. Entonces, quiero estar por encima del 9 para ser alcista. No cerré. No cerré, no cerré. Ahora, estos son 3 cierres abajo. Esto me hubiera vuelto bajista, pero instantáneamente el cuarto subió. Pero ahora 1, 2, 3, hubieras comprado toda esta subidota, ¿no? Y luego tienes un cierre por encima, 2 y el tercero por abajo fue bajista. Entonces, esos son cierres para confirmaciones de niveles, ¿ok? ¿Y qué otro ejemplo tengo de eso? pon tu Solana. Acá, tuviste un cierre, el segundo no cerró por encima. Estos solamente fueron wicazos, ninguno cerró por encima. Lo que quieres ver es básicamente, ok, aquí hay 1, 2, este cierre fue por encima y este 3 de mi línea meme que estaba en este canal. Lo que yo veo aquí es más bajista. La vela topera, tienes hasta 7 velas para invalidarla. ¿Por qué? Te voy a enseñar acá en la de Bitcoin. Lo vimos en la semanal, ¿no? Porque si pasas de 7, se acabó. Esta es la única vela topera que vimos en el ciclo del 2021. No hay vela topera acá, no hay vela topera acá. Esta es una vela de indecisión, nada. Bajó y venimos para acá arriba. Ahora, ¿cuántas velas hay acá? 1, 2, 3. Y la cuarta fue la que te dio la confirmación. La confirmación está aquí abajo. Y justo cerró por debajo, lo vino a retestear y te tiró. Y eso fue el inicio del mercado bajista. Entonces tienes 1, 2, 3. La cuarta fue la que te tiró. Puedes tener hasta 7. Si hay 7 velas acá de lado y no está cerrando ninguna por debajo de esto, cancelada. Es la única forma de cancelarla. Y recuerda, no toda esa ciencia es cierta, pero eso es como le damos más probabilidades nosotros. Y ahí lo tienes, mi estimado Leo. Vámonos con LH, la chingadera esa que sea. Alex, you got that stuff ready? I don't know what the fuck that is. Oh, 1 second. I gotta add you to stage. I gotta remove this, add this, put this. Go, guys. That's. Is it ICHI?
Yeah, it is ICHI.
No, wait. No, this is not right. It's IXHL.
Oh, IXH. Okay.
Oh, there you go.
This looks more like what we usually look at in terms of stocks. Just down only with little sequence
with huge bumps.
Yeah, you know, it's all good. It is what it is. We can quickly draw this very easily with just these wick lows. Oh, don't know what that is. Not a fib level, just like this. And then now you can see on this chart, it's very easy. You just have 2 lines, really. Now you're watching to see, essentially, you're looking at this to be a solid breakout trend shift. So you ideally now want to just hold specifically above, you know, the weekly 9. That's a good area to kind of gauge strength. And as long as you're above the weekly 9, you should start moving up. And the idea now is you are going to try to need to reclaim the EMA 34 on the weekly to actually get the price structure shift. That's a big deal for this chart, because I'll throw the 55 off and you'll just see this chart's been very sold down, specifically by the 34. And I don't think there's ever been an occurrence where we've closed above it. Now, there's been occurrences. So you closed once above it. You get 1 candle closure above that zone, the EMA 34 on the weekly, and then you don't hold that. And that makes sense because that's a big zone that generally is, once you reclaim that, a buy trigger to give you a breakout move to the EMA 100. Why am I bringing that up? It's because into this week, you are potentially going to get a reclaim of that. So logically, you shouldn't be longing up here, 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 but rather waiting for the close to confirm the reclaim and then watch to see if you throw it back, because each time you have thrown it back right here and it didn't hold. And then here you couldn't hold the throwback, actually. Losing that, all the major moving averages, and then rejecting the 34, that was the bearish retest. So in theory, you should just be engaging for a reclaim and / a bullish retest in that zone. Weekly EMA 34 is just an easy trade. And that way, then you can be using that $2 psychological number to say, yeah, I mean, once you got back above $2, logically, that did open up the new range. You did very quickly go up before to, you know, a really insane number. Here's $12. It's pretty insane if you really look at that range. Viewing that, that's kind of absurd, actually. In 1 week, the range, and then it just stayed that way. But that's also what you're dealing with these charts. Now, volatility is at extremes, so it looks like it potentially wants to reset potentially. I mean, we won't know until next week, but with it at 100% volatility for multiple weeks, with it consolidating, the logical move would mean that this resets and we do get a squeeze up. Now, I do think if you hold above the EMA 34, I do think $4 can become a real possibility. That is still a 363% move, an absolutely absurd number. But again, that's just what you usually get with these charts. Big ranges, and that's just shown on like the moving averages. The weekly reclaiming the EMA 34, holding and then moving towards that $4 will just give you confidence of a good monthly closure. Keep in mind, this entire chart history, you've never actually gotten above the monthly 9. So this, and granted, like hold it, like you reclaimed it one time, I will say, but you never held it. And that's the thing. Like you don't want to just see it get lost and then it sells off. You want it to instead, come up here and then consolidate a bit. And then that way you can get confidence of a move to the EMA 21, just sitting right around that weekly EMA 100 actually. Which again just tells me it's not the most absurd to be thinking about a move to $4 if and when you can actually get back above $2. That could actually open up an easy trade. Waiting for the weekly to close above $2 has opened up a really nice trade where you've just essentially gone up once you do hold $2 on weekly candle closures. This one literally, sold off. Kind of insane. It's literally just been selling down only. But the point is, you did solidify this being support. You got the nice bounce, and then you went up. Major volatility to the upside, came down, tried to get a bounce again, broke down, lost it. So $2 remains the big zone. That's where volatility likes to come. If you're not positioned now, I would just be waiting patiently for that to occur, in my opinion. You did reclaim the daily SMA 200, opened under it. So again, you're just kind of at a tricky spot, but it is still a big spot nevertheless, where this will show you reclaim the SMA 200. Yeah, this will give you a big move up. So I understand like Bull's argument for a bigger move up from here, but it just needs to simply start reclaiming these major resistance zones. Like, even on the 3-day, you have that EMA 100 perfectly right around that $2 zone. Getting back above there gives you confidence of the move right around that $3.53. Again, right around the weekly EMA 100. So this chart, you're kind of just watching to see here. If the EMA 100 continues to hold, that'd be a great sign. Needs to. And then also if the SMA 200 can actually get reclaimed and hold above, that would be the first start of your big shift on this chart, because you would just see not really expanded from the SMA 200 when it did get reclaimed. And let's see, even on this volatility though, to put it in perspective how important the SMA 200 is for this chart, on that reclaim, you went up 84%. It just kind of sold off and then you lost it and then you dumped. So really for me, you're watching to see if this actually, like holds the reclaim into today. That'll just be a big sign. What an interesting chart, though. Looks, oh, look at that, $4 right around the quarterly EMA 9. So, everything to me looks like on this chart it wants to go to $4, the $3.50 mark, if $2 doesn't reject us. So for me, I think the easy trade will be to decipher this on the daily to then interpret how the weekly will shape up. You want to really watch the EMA 34 get reclaimed. Seems likely it will, knock on wood, that it does today. If it does, you need to be watching a move back into that, like essentially 60-cent zone, 55-cent zone. That should be the spring that gets you above the EMA 34 before the close, getting you above $2. $2 is your trigger. You reclaim $2, you easily can long that and focus on the $4 region. This will obviously shift down, so this can easily shift down more to around that 350 to 360 mark. But overall, this chart's been sold down only. This has been a really sold down chart, and that's just shown on the monthly 9, never getting reclaimed. So you should be gauging this zone as hopeful, bullish hopium, but it's you still need to reclaim above those certain levels. And that's why I think waiting and watching this next week for the EMA 34 reaction will be key. Because again, you've seen this before where it reclaims it and then you just totally deviate, sell down, reject. So now what bulls need is a pullback logically to retest that zone. And then that is what breaks you out. Testing $2 like that would mean you'd get another shot at the EMA 100. Getting above the weekly EMA 100, yeah, that's your sign that you are going to squeeze up, to my opinion, a pretty insane number. I have $12 being the next zone. Weekly, can't even use it on HPDR. This is literally at the 100% range at $2. HPDR is definitely not very helpful on this chart.
Yeah, on anything that's fucked like this, it's impossible. Like any meme stock.
Yeah. All I'm getting though is even on the daily, you do see $2 is the 100%. So you should be gauging that as major resistance, some reaction there. And that's it. I mean, you're just generally now waiting to see if the daily will get back above the SMA 200. Hold that. If so, you're going to move to $2. Reclaim $2 really opens up $4, like $3.50. And you will literally just take an easy trade on the weekly, which is just an EMA 34 reclaim flipped into support, which was resistance, giving you the next target to the my zone, which is the EMA 100. You just have to be mindful of the $2 zone. Cats are going crazy right now, but yeah, that's all I see.
I hear.
That's
I
it.
hear poor far.
Mean reversion move off, extreme volatility would mean a reset logically. That's the hopium. And then, you do squeeze, you hit the 4-hour the weekly EMA 100. And then there you should expect some major rejection, of course. There you'll either test $2 and hold it. If you can hold $2, if assuming the scenario holds, you hold $2, this will be your big break. Probably testing the EMA 100 again leads to a nice breakout reclaim. It's not really until you get back above the EMA 100 on the weekly where this can go up to $12 and higher. So that's all I have on this chart. Very simple. You're watching the weekly and you're watching that daily SMA 200. It is, rare to be at that point on this chart. So I don't know why my internet's cutting out. There it is. So, logically, this is the zone not to be scaling longs, but rather just wait to see if this holds, reclaims, and holds. If it does, you'll easily shoot up to $2. There, you need to watch for major resistance or not.
Perfecto. Right after this, Tesla, sir, for you.
Nice.
And I hope whoever has that cough in your apartment feels better and takes some something for their throat. My God.
Yeah.
Sounds like a dangerous cough.
Yeah. I have the cats freaking out. I have someone coughing, dying in the background. And I'm trying to just look at IXHL for the board.
Can I tell you, I used to have a neighbor when I lived in really shitty parts of town when I was growing up, and we had an apartment in Mexico City. We lived in an apartment in Mexico City. We didn't have it. We lived in it. And it had no windows. Like a lot of windows were missing, right? So mosquitoes would eat us alive. But the neighbor right behind my room, was an old man that would cough all fucking night, all night. And one day he stopped and I thought he was dead, but he actually moved out. He moved out. And now I smoke weed outside, and every time I go outside, I'm coughing like a motherfucker outside. And I'm thinking, now I'm the old man to the neighbors that I used to be, like that I used to complain about. And I'm just coughing all day. And they're probably like, he must be so sick. And I'm just getting stoned out of my mind back there. So,
smoking that dank.
That's
that
right.
That was the problem with me back in high school at my parents' house, where I would be coughing, and I would take like low key hits. I would have like a little one hitter, where it would be just enough of a pipe to be able to put like one little like one hit basically, so it doesn't have a smell. And my whole thing was I'm gonna get away because I don't smell like weed. I would have eye drops and shit, so my eyes would not get red. But my mom would always ask me, Why are you coughing so much? I gotta take you to the doctor tomorrow. There's something up with you. You've been coughing. You've been coughing like this for weeks.
Don't you love it that a lot of people just don't get it, don't understand what's going on?
And that was the same thing with my ex before she found out that I actually did smoke weed. Is she was like, "You've had this cough for a few weeks now."
Yeah, little do they know. I mean, that's who was coughing was you on stream. You're who we're talking about. Whenever you hit something, you just cough crazily.
It's so funny, my God. It's unbelievable. Thank you, my boys. Thank you. Estamos viendo Inconex Healthcare o Inconex, no sé cómo mierda se diga, IXHL. Esto ha tenido un tope justamente acá en los $360 y está cotizando ahora en $1. Así es, ha bajado 360 veces. Técnicamente no es eso, Alejandro. Bajó solamente 99%. Ok, ya. Podemos ver que siempre hemos estado debajo del promedio del 9 mensual. Literalmente una vez pudimos cerrar por encima y fue una instantánea toma de liquidez y desde entonces nos ha rechazado todo el tiempo. La razón por la que estamos viendo esto en este momento probablemente es porque está retomando en este momento sin cerrar, todavía faltan 6 días y 4 horas, ese promedio del 9 mensual. Ahora, no hay mucha estructura en esta tabla. Esta fue la última toma de liquidez grande, la que lo pone también en un número coqueto en los $2 y también coincide perfectamente con toda esta resistencia. Personalmente, si lo fuera a mover, lo pondría acá. Ahí está, en los 2.13. Para hacérselas de pedo, porque Alex lo tiene en los $2. Tengo que ser diferente, brother. Vamos a la de 2 semanas. También acá podemos ver que recuperamos el promedio del 9 en este cierre. Estamos en extremos ante esta caída. Y esta caída ya parece ser, después de extremos, esperarías un rebote. Y es justamente lo que estamos buscando en este momento. Nos gustaría ver este promedio del 9 ser aguantado, tener este cierre en 7 días y 4 horas, que todavía para cerrar la de 2 semanas, por encima de este promedio del 21 en los 1.13. Y eso nos catapultaría a la probabilidad de venir a los $2. Ahora, ¿vamos a venir y romper esto por primera vez después de la caída? Probablemente no, y probablemente vengas y tengas un rechazo y hagas esto. Y eso que sería hombro, cabeza, hombro, y ahí pues sería una estructura de fondo, pero esto no, de estructura no tiene nada, esto solamente va para abajo. Semanal, para un poco corroborar esto, nos está rechazando el promedio del 55, pero estamos por encima del 34. No habíamos estado por encima del 34 ante este cierre en noviembre del 2024. Pudimos cerrar tantito y pueden ver que esos cierres son súper pequeños. Entonces, cuando ves cierres tan chiquitos por encima del 34, si ves esto cerrar en 3 horas, 47 minutos por encima del 34, se empezaría a sentir bien. La cosa es, ya tienes el primer rechazo acá en el 1.58 del promedio del 55, ¿ok? Y la diaria todavía lo pone más fácil. La diaria te está diciendo acá, papi, tengo un cruce plateado a la alza, el retesteo del promedio del 9 podría ser algo chido para ti, estabas por encima del S&P 200 y ahora estamos cayendo y queremos retomarlo. ¿Qué es lo que quieres ver si quieres ser alcista en esto? Empezar a cerrar por encima del 1.19 de este promedio del 200 que está pasando por acá. Si empiezas a cerrar y tienes 3 cierres diarios por encima, podrías empezar a pensar en tus siguientes objetivos. Tus siguientes objetivos serían semanal, la zona del 1.58. Después del 1.58 y del 1.60, vamos a ver si en la de 2 semanas teníamos algo arriba, los $2 van a ser tu siguiente objetivo. Pero vas a tener que ir uno por uno, empezando por la diaria. Diaria, arriba del 1.19, en la semanal, por encima del 1.58, y de ahí te vas a los $2. Todo esto es invalidado una vez que pierdas los 66 centavos, porque eso quiere decir que vas a hacer un nuevo bajo. Así de fácil. Así de fácil, tío. O sea, ¿qué más quieres que le digas? Where's my tuberculosis friend? Where's oh, there you go. Dude, that was so fucking mysterious. Hang on, you're muted.
It's plugging in my phone.
That was so funny. I wish everyone could have seen that. 1 second. Oh, Coinbase. Either way, please share your screen with me. And
All right, monthly on Coinbase. On the monthly, we are currently getting momentum freshly going back into the bullish control zone. This is the first time momentum has entered into the bullish control zone freshly since about December of 2022. The last time we entered into the bullish control zone, let's take by a measure of how much price moved up after entering into it. It entered on this candle. Immediately, price moved up about 46%. Doesn't really look like that much on the chart, but it's about half, about 50% on the first move. And then it continued from there, just had some consolidation, a little bit of a pullback. Then we had a move up of about 95%. Still stayed within the bullish control zone, uh, moved up about 220%, still within the bullish control zone, all the way until about 325% did it then lose the bullish control zone. Now we are freshly entering into the bullish control zone. And how much have we moved up so far? Only about 33%. Only. Let's take that to somewhere around that $500 number and see how much that would be of percentage wise. It's only about 50%. That's not even anywhere near the crazier end numbers. If we were to take 90%, let's be conservative and do 80. That puts us roughly around $600-ish, right around that 78.6%. Let's see if the 78.6% has any significance on the monthly. See this breakout. Kind of hard to see with the lines all jumbled here. This was 88.3. Not really. Seems like the higher ones are the ones of importance, somewhere between the 88.3 and the 100. So if we were to take the lower end number of that, that'd be the 88.3. That puts us at just under $700. Right now, we do have a very beautiful United States pattern on Coinbase as well. See if that manages to line up with our $700 number.
Oh, get ready, son. We already did this.
Oh, we did?
You'll see. Like, do it again, though. I got 657 on mine.
Wait one second. Trade wrong.
Hello, we're here for massage. We massage your wiener. We massage wiener now.
I'm getting a significantly higher number.
I see. I don't know why my number is so low.
$1,252. I personally, I'm just going to go out on a limb. My opinion is that it's not going there that cycle, but my opinion is irrelevant. I'm just telling you, I don't think that's going to happen. Maybe in 2028, 2030, maybe. I don't see it happening right now. Where is the money going to come? Where's the money going to come from to make Coinbase do a forex?
From JP Morgan Chase on their because remember they don't sell their token. You cannot buy base. You can only buy their stock, which I think it's the most brilliant play.
I see. Would that be enough capital to do a forex and market cap?
I'm saying not today, but it will. Yeah, dude, because JP Morgan Chase is the biggest bank in the world by deposits. So I would say so.
Was number 2 the European one? I think it was the European one, right?
No. Number 2 would be just regular banks. It's either Bank of America or Citibank.
I hate Bank of America, by the way. Personal grudge against them.
I hate all banks.
They closed my account out for crypto transactions.
Oh yeah, banks suck.
They literally had me go into the
stupid.
branch. They had me bring a notarized document that I signed saying that I would not dispute or have any transaction issues with purchase from this specific creditor. Where I had to sign off on that specific merchant, which was crypto.com. And I had to go in there, get that notarized and in the branch with the branch manager that I sign off on this. And they're like, okay, so for the next week, I was allowed to buy crypto from crypto.com. Week after that, my account is not working, my cards don't work, and I call customer service, and they say that it's a decision from higher ups in the company that we're no longer comfortable doing a business with your account. So we've decided under our terms and conditions to terminate the account, and you will receive your account balance in a check within about a week or two.
What a piece of shit.
So unless you have another bank account or any other cash, you're fucked for that week or two.
Yeah. Oh, yeah. Oh, yeah.
Luckily, crypto can be frozen, and you can just transfer some crypto over to either any one of your centralized exchanges, and you can get fiat that way.
Yeah.
Well, let's get back to Coinbase. On the quarterly right now on Coinbase, we are getting a slight rejection from the median. Right now, if we do get a closure from the median, we'd want to see where the median goes. If the median goes above price action, then you have a 61.8% chance of coming back to the bottom 38.2%, which is also going to move. But let's say the median moves below price action. Then it's going to be the same condition as if you had closed over the median, where you're very likely going to get another retest of that median. Almost certainly, like you're going to get a retest of the median. I don't have the exact numbers behind it, but with how often I see it, if I would have to like just give you a rough number, it's more than 80% of the time that you get that retest of the median. And then that is usually the spring into the top 38.2%. These numbers will change. It won't be by much. But right now, it sits at about $639. That $600 area is very, very important. Do you remember how many times you saw it on the monthly HPDR setup? Saw it a couple of times.
Mm-hmm.
And that's what I think is going to be the top for Coinbase, somewhere around that $500 to $600 number.
Oh.
And I'm going to cover my ass and say that's only relevant if we get a monthly close over $369. Very beautiful number.
No.
It's funny how that's actually it's really 368.90, but you have to close over 368.90, so I can say 369.
Very professional, if I may say so too.
The most.
The most.
2 week right now is getting to very extremes on momentum and volatility. Very, very likely area for a pullback from this zone. You're getting to the 95% of the HPDR. And as long as you are closing below the 95%, which is about $428, you are more likely to get a pullback than not. And right now, to be honest, this is kind of the opportunity zone for a short because you have probabilities on your side. You only have a 5% chance that price is going to continue from this point. So your risk right now is what? 12. That's a little wide, 12.3%. You would have been better taking it off on this retest of that 95%, but that's hindsight. 12.3% is your risk, and you'd be looking for a retest of somewhere around that 9 EMA at a minimum. And right now, the 9 EMA is sitting somewhere around 19%. So it's still more reward than your risk. It's just not the quite ideal scenarios you'd be looking for. TP2 is where it becomes more worth it. Where if you can get a retest of that bottom 38.2%, which is also very likely considering that we're at the 95%. But the reason it's less likely is because these ranges will move. So this 38.2% is not always going to remain in this area. You could get the retest of the 38.2% over here or over here. But as of right now, 38.2% is sitting at about a 31% move to the downside. That's some pretty good RR. That's almost 3-1. And right now, with momentum coming from very extremes and volatility coming from very extremes, you are going to get a pretty decent mean reversion. So even though the risk is kind of not the best, it's still something that I would take somewhere a short anywhere around here. If we get a bounce, probably add to it, and then the stop loss at this wick high, aiming for a minimum of a reconnect of this 9 EMA. And probably I would take the whole position off at that 9 EMA, to be honest. Just keep a little bit in case we continue down to the 38.2%. Weekly is also putting in a little bit of a topping signal. Momentum's just about to flip down. Volatility is still expanding, but very close to flipping. While the Jewel is now putting in a pretty bullish cross. It's happening a little higher than we would like to see it in the bearish control zone, but it's still under the bullish control zone. Still getting should produce decent results. Let's switch out of this. And see the last time we had that cross, see if we're anywhere near in this HPDR zone. Oh, we have not had one. On this one, somewhat comparable, although this had been higher up, so it would be less powerful than the one we have now. And we went, where did we go? All the way up to the 88.3%, which well, when we had the cross, the 88.3% was lower. So in that zone, we went up to somewhere around the 97.5. So if we went to the 97.5 at this point, that would be right around that $500 area. The prophesized $500 that had been written in the stars for the past couple of months. And it was funny talking about $500 back when we were trading somewhere in the twos. Not so funny anymore now that we're just around 400. Five days now, also starting to switch down on momentum. Volatility is just about to enter into a contraction phase. Also going along with the idea of, at the very least, a short-term pullback from here. And that's going to be as long as you're even ticking below $444.65. Getting one tick above that will invalidate the pullback idea. So that makes it for a pretty easy stop loss. 2-day right now is getting a bounce right at the top 38.2% and the 5 EMA. It makes sense to bounce from this zone here. And this would be the area where you're likely going to get a better entry for that short. Because if you continue to hold this 38.2% on a closing basis, what's likely is that you're going to get another retest of somewhere around this breakdown zone, right around this 400 to maybe 410. And then that'll give you an even tighter invalidation for your stop loss. And if you are already in the short, this is the area where I would add, or if you're not already in it, this is the area where I would wait to start it or to open it. Right now, what goes along with the pullback is momentum is starting to shift down, rejecting the bullish control zone, while volatility is still contracting. So that's still a little bit of a hopium signal, but it doesn't tell you that you can't make a higher low. It just tells you that price is overall bullish. And right now, we're starting to get this first signs of a God mode sell signal on the jewel. Just started to flip dark blue. The only way that this will not flip dark blue is if price can close over about $405.31. If that happens, that'll also take us very likely over the 50%, and then we'll get one more retest of the 61.8%. At that point, still the short technically would be valid, and you would have a very basically no stop loss or no loss at all in this invalidation. But it would be more likely that's going to break at that point. I'm still going to take the short personally because of the risk is so small. But the second that I get invalidated on the short, I'm going to be flipping long.
Oh, I'll be flipping long.
I'm already long. I'm in long for the past. How long has this thing been alive? 4 years. Jim Cramer told me $450.
Wow, Jim's pretty good.
Just scratch this. On the daily right now, we are getting right around that resistance zone, same areas, ideas on the higher time frame, prime opportunity area for a short. Because if you can't start to break above this area, very likely you are going to go retesting these highs. And in my opinion, at that point, I think you are going to break them. So the closer you can get to these highs, the better RR is for the short in this zone. Because even if you are bullish, even if you're the most bullish on Coinbase, with a type of setup like that, it doesn't make sense not to take it because your risk is so small. And there's always a non-0% chance that the idea is going to end up playing out. And because you're only risking 5%, if you're wrong, what's 5%? You can just immediately flip back long. I used to be against that idea before. What switched me over was somewhere around late last year, where I started actually implementing that idea and switching it around, increasing the leverage just a little bit, and it instead of the original idea being right, that ends up making more money than the original idea being right. You just need to let go of the need to be right.
Yeah. Which, by the way, good luck to everyone.
Oh, that was my whole thing in the beginning. Was I needed to be right.
Yeah,
I'm pretty
that's the
sure you can
biggest
tell
problem
from
we all
you can
have.
tell from my Instagram stories. I needed to be right.
Yeah, we all did. We all did.
On the daily, we are now. What I want to see is not exactly a close over the median, although the median would be very productive. It would technically give you a 61.8% chance of that 38.2%. But you always have that 5 and 9 EMA still hovering there as resistance. And it's very unwise to long while you're below resistance. Ideally, you want to see a close over that 5 EMA. Then you could use a back test of the 5 EMA to get a long into somewhere around these highs. Then you could take that short at that point. I personally will be taking it on even because I'm not going to be taking long. I'm looking for the short. If the short gets stopped, then I'll just long the breakout. Thank God BTCC has it, right? Coinbase?
Yes, he does.
Based.
Coin-based.
Coin-based.
This is why I wonder, why are people watching any other trading programs when you can have amazing jokes like the one we just gave everyone right now for free?
There's some people who think that if people use curse words or they're not completely serious, that they're giving you bad information, and then they listen to Barrett Soloway.
Good morning, everyone. I'm talking to you like you're 4 years old.
It was very, very funny in at the crypto events in Dubai, and when I was telling people, "Oh, I just use my phone," like what?
There.
Yeah, here's my whole trading setup, just my phone. But he's got 7 monitors at home.
That I'll never understand. I've never used more than one chart at the same time. Like you can just go from one chart to the other.
It's because I don't know if you've seen, but what these Twitter influencers like to do is they'll post like a screenshot of their positions and they like to show like, oh look, I'm a sophisticated elite trader, and they'll have like 33 different positions open without and they'll intentionally only screenshot the positions instead of the P&L cards, because the P&L card tells you it's a demo account.
Oh, of course.
I need to start doing that. Get more likes. I need those likes, guys. Come on, just throw me a like.
It's what most of them do. Just screenshot the position details on the demo account, and it doesn't say demo anywhere on there. That's how you can spot it that somebody's showing you a demo account screenshot, is when they don't give you the P&L card.
Those cock-sucking baggers, whatever that means.
Oh, we give hand job now, Mr. Powell.
You want the
hand job now?
sucky?
Should I suck the dick?
That's what I'm assuming. It's your birthday, so probably a surprise is going to ring the doorbell and then do some shit like that. That's why it's the preview. I'm just getting you ready. I'm trying to see if you like get confused and you really think it's happening, so that I know it's happening.
If it doesn't happen, then Alex is not the roommate that I thought he was.
Oh,
wait, what? That's kind of gay. That what just happened? It's a little. I understand what you're saying.
Are we not talking about a woman?
Yeah, I know. I understand what you're saying, but the way it came off was a little gay. That's why.
It indeed did.
I still love you. It's your birthday,
I gotta preface that with no diddy. There we go. Now I say no diddy.
Yeah, now you're good. As long as you just say no diddy, you're good.
Diddy. But the hopium now, which is forming on the bull side, is that daily is forming hidden bullish divergence. We are breaking these lows, and as long as we are closing above about $388, there is going to be possibility for hidden bullish divergence. And now volatility is at extreme lows. What we want to see to confirm the divergence is a close over this previous wick high to confirm this as a local bottom, and that would be at about $405.31. Not only would that close over the median and close over this wick high, that would also reclaim the 5 EMA. That would be the one condition I'm looking for that move back up to the current highs. That divergence would be how many drives? Just one. Not the strongest drive of divergence, so not quite enough to break these current highs, but it should be enough to retest somewhere around them. And that would be the exact area and reasoning for taking the short in that area alongside the very small risk. Here's another a piece of confluence to add to that idea of the short. Here you open up the jewel. The jewel is now about to give you a very bearish cross, and this is happening just below the critical zone. This is happening very high in the bullish control zone. These bearish crosses, the higher they happen, the more powerful they are. And if you do get that bearish cross confirmed, it's not confirmed yet because we haven't got the cross. Very likely, as long as you close below somewhere around this 5 EMA is what I would prefer to use, which is about, let's say, $400, a very round psychological figure. This is going to confirm as a cross. And once that cross happens, usually right after the cross, within the next 1 or 2 candles is where you get the reaction from the cross. So whether it's a bullish cross, you'll get a massive pump within the next 1 or 2. If it's a bearish cross, you're going to get a nice dump within the next 1 or 2 candles. And that would take us towards somewhere around, my first zone would be this 21 EMA at about like $375, although I don't think that's where it's going to stop based off of that cross. I'm thinking it's going to come somewhere closer to this 61.8% to 78.6%, right around like 330 to like 350. And at that zone, this is where bulls really need to start getting cautious on Coinbase, because if you switch to the weekly, your weekly higher low is currently at about like $334. If you start to take this higher low out on a weekly closing basis, it starts to put in the entire rally into question, because you're going to be coming down to retest this whole breakout zone. And at that point, probably you're going to get a lot of panic selling into the market, and that's going to push the price even further down, shifting our weekly uptrend into a downtrend. And if Coinbase is in a weekly downtrend, I find it very difficult to be bullish on crypto as a whole. Right now, we're still in a solid uptrend, so this is just a bad idea, just a bad dream. I don't have any more of my Sweros. I gotta drink actual water. Disgusting.
I was wondering what was going on. I heard the clear water just going through your mouth, and that makes no sense. Where's the Coca-Cola, everyone?
My internal organs are shocked. What is this?
They're like, oh, hydration.
Water.
This is terrible.
We like Coke Zero, Sweros, and liquor. 2 days also right around that same zone as the daily, hovering right at that 38.2%, which is at about that 395-ish, 400 to round it up. Right around that 5 EMA 38.2%. As long as it is continuing to hold this on a daily closing basis, I wouldn't be looking for the breakdown to happen just yet. It's still more likely to happen based off of these candle formations. It's just not something that has enough of a probability that you should open a trade and risk your money on. Because sure, candlestick pattern or formations do tell you a lot, and they can tell you to get ready to position on something, but it's not enough to replace the confirmation. Because there's a lot of moves, like in Bitcoin, for example, where it'll put in one of these shooting star candles, never give you the confirmation on the follow through below, and then on the next candle, it'll just smash right through the top. Market's not going to make it easy. See if there's any bearish divergence. 2 days now forming possible bearish divergence by having a lower high on momentum, higher high on price. That bearish divergence confirms with any close below about $387. And that's what's going to bring us down to somewhere around that $340-ish to $330 zone. Reconnect with that 2-day 21 EMA. I'm personally going to be looking for a higher low at that point, because you kind of have to, based off of the same theory as even if you're bullish, it's simply retarded to not take that short here. Simply retarded to not take that long here, even if you're bearish, because you just use this wick low as your stop loss. And that would be about like 5% against you. Even if you're the most bullish, the most bearish people, you'd be retarded to not take those setups. And forgive me for using the R word, trigger warning. But it's okay now because our president uses it.
Did you see the new South Park?
No, I didn't watch it. I saw that Trump was angry about it though.
No, I don't know about that, but you should watch it. It's really fucking funny.
I have Paramount Plus now, so I can.
There you go. Look at us. Look at
Look at
us.
us! Look at us! It was just like one of those things where I was like, I refuse to pay for another streaming service until it's like, fuck, I want to watch this stuff. I'm not gonna just be a stubborn little bitch.
Yep. It's a shame.
Daily, now right at that reset zone as well. Very, very close to the invalidate, or not the invalidation, but the next entry for the short, where with that daily close over the median /5 EMA, 4 hours going along with the idea of that short-term bounce, where we're getting a flip back up on momentum, getting back out of the bearish control zone, and now getting back over the moving average. See if there's any divergences. What's the close on this one? 387. 388, technically very, very slightly higher low. So there is possibility for hidden bullish divergence on the 4 hour as well. What you would need to do on the 4 hour to confirm that divergence is you want to see a close over about $405.32. Same number as we saw before. If you get a close over there, that'll confirm your hidden bullish divergence on the 4 hour, and that'll also give you that move back up to retesting these current highs. Not exactly a full test of the current highs, somewhere slightly below it at around $430. If you get that confirmation, that's where you should probably have your short order preset, because it's probably going to be one of those moves where you just get a little tap and an immediate rejection. If you don't get an immediate rejection, I wouldn't want to short this, because then it's going to be more likely that these highs are going to break. It's like the same idea as the Bitcoin 4 hour 100 EMA that I was telling yesterday to the Discord. That the 4 hour 100 EMA is a zone that very likely could be a macro or a local bottom, but you want to see immediate reaction. If you don't get that immediate reaction, very likely that's not going to be it. To the momentum. All right. Monthly is now freshly flipping back to the upside on momentum, rejecting the bearish control zone. And what's this low? This is $178. This low is, nope, made a lower low. Ever so slightly escaped having hidden bullish divergence. That sucks. Bitcoin has it, but Coinbase does not. But Coinbase does have expanding volatility from the lowest level ever, with momentum freshly turning up. And we are going to be flipped up as long as we're closing over about $305. Curious. Take this high, take this low. Right around $477, a little bit below our $500 area. But the next target is a lot more relevant to that $660 area. Let's see what the next number is. I wouldn't even consider this number. A little too ridiculous. And whenever I say that I wouldn't consider this number, or it's a little too crazy, I'm not saying it's not going to happen. I'm just saying what I mean is that there's several levels in between that zone, to where considering this zone before those levels is not worth looking at, in my opinion. Two week also positioned to the upside with volatility a little high, not quite topped out. It gets topped out somewhere in the upper 80s, so it could go a little bit higher from here. Although since we are getting rejections from that $430 resistance zone, I do think this is eventually going to start contracting before we get that move up. And what's going to confirm that this is going to contract before the move up is if we continue to close below the high of about 436. If you keep closing below 436, This is going to go into an extremes and then contraction, and then you're going to get the actual I don't want to say aggressive move, but like flush out before the higher low, and then the move back to highs. Weekly is now starting to go into that contraction phase. Same idea that I have for the 2 week. Weekly is just doing it a little bit faster. Weekly is very close to flipping down on momentum. Also agrees with the idea of a short-term local top, and we will flip down as long as we close below 420. Very beautiful number. 5 day also now going into a contraction phase, and momentum is just about to freshly flip down. It's about 3 hours until it flips down, and it will flip down with a close below 423.21. This is the first time that we would be flipping down in the critical zone since about November, and November was a macro high, not just a local top. Right now, I'm still leaning to the side that we'll put in a higher low, but there are signs starting to appear that this could potentially be a macro top.
Damn.
But you guys already know what my opinion is. I think we're going higher.
Yeah.
2 days.
We should.
2 days now, almost fully reset on volatility. We've gotten our first extreme. Now we got to look for the double extreme. And as long as we are holding above this on a closing basis, this 5 EMA, that double extreme is likely to happen to the upside. This is also pushing my overall medium to long-term bias towards the upside. And and still what makes me think that somewhere around this cycle, we will tap at the very least $500. 2 day now, freshly flipping to the downside with volatility almost fully reset. What's going to cause volatility to expand to the downside is if we lose not this low, but this low here at about $348 on a closing basis. That's very important. If you lose that on a closing basis, then you're going to get that volatility expansion to the downside. And then you'll be hitting those targets somewhere around that, at a minimum, $330. But with that volatility expansion, I don't think that's going to be the bounce. That'll be the reversal. If you do get a reversal, more likely it's going to come from somewhere around this low $300 zone. And you guys remember what that other momentum pivot was? Was it the 5 day, I believe? Weekly? Which one was it? Yeah, the monthly. That was at $305. That would just be another retap of that monthly momentum pivot. It wouldn't be anything that would flip long-term momentum bearish. But I'm sure it would scare a hell of a lot of people to go from 440 down to 300.
Oh, yeah. Oh, yeah. Big time.
Any divergences here? We are forming hidden bullish divergence on the 2 day as well. Some hopium. A little bit difficult to confirm it. You would have to close over about $421, and that would give you targets of new all-time highs. You would have to just use a fib to get any rough idea what those highs would be. Take it from this high to this low. Oh, beautiful, $500. Daily also in that same idea of right at that zone where we could either have a local top here or a little bit higher, and the confirmation for that would be that same closure of that 5 EMA. As long as we are below the 5 EMA and we're rejecting the 5 EMA, it's more likely that we go down from here. And momentum is now breaking out of the bullish control zone, and it's going to be pointing down as long as you're below $428.75. And now volatility has reset to extreme lows. As long as we are below that 5 EMA, that volatility expansion is more likely to happen to the downside. Let's see if we have a similar example. We had volatility at extreme lows here, which expanded to the upside. We had a retest, held the 5 EMA, expansion. Let's see if we can find one to the downside.
It would have to be 2021, no?
There's someone went to the downside, 2025. We had 2 periods of 0% volatility. We had price consolidation, chop. And then we had our volatility expansion. Let's zoom down. This is where we had lost all of our EMAs. So I'll find you an example of just the 5. It's hard to use that one as an example because you did lose every single one. Kind of here similar, somewhat, where you had this red 9 and 5 EMA. You got a slight closure above it that gave you a retest of your 21. The second you deviated it, that's where you got your little bounce off the 200. But the real dump, or the real reason you even tested that 200 is because you lost your two fast moving averages, the 9 and the 5. That gave you the move to the 200. Then losing the 200 is what gave you this massive move to the downside. Let's see if I can find a more similar example to what we have now. It's not very similar. Now you have one right here, kind of, where you had that loss of the 5 EMA right there, and then you dumped to the 100. Let's see how much of a move that was. 10%, not bad. Let's see if that closed below. Ever so slightly close below that red 5 EMA right here. Bearish retest of the 5 EMA, and a nice little dump ski. How much of a percent did we go down again? About 9.4%, very similar to that 10% number. So if we use 9 to 10% as our rough number, from that 5 EMA, 9% would bring us to about $360-ish, 10% to about 350s. Very interesting, because we do have other setups taking us towards about 350. Now we'll go down to the 4-hour. 4-hour also now has momentum pretty strongly to the downside. Volatility is now freshly entering into an expansion phase. We have a loss of our 9, 5, and 21, and now we're just getting a bearish retest of the 21. And as of now, this is just a rejection. This 21 EMA is resistance until proven otherwise, and as of now, it's still proving itself as resistance. And somewhat of a head and shoulders right here too. Seems like this 360s, 350 area is inevitable. Let's go to RSI. Get the medium time frame divergences, and then we'll cut it there. Five-day still got active hidden bullish divergence. That's good to know. For the putting more points on the side of the higher low possibility, and that hidden bullish divergence is going to be active as long as you're closing above about that $334 area. You're already within the critical zone, so you can't really give you any numbers from there. But what I could do is change this RSI to an 85 and see what number that gives you as a next target on the divergence. About $410. Not really that much.
By the way, totally forgot to ask you when you were doing Bitcoin. I saw Crown posted the witch setup yesterday to the downside, or 2 days ago.
Oh, there's a full moon, isn't there? Huh?
A bearish.
Bear moon.
Yeah. Yeah.
Oh, that makes me a lot more confident in my 110s.
Crazy.
And we have been talking about this 110 number for the past, I think, 2 or 3 streams. I haven't really seen anyone else on crypto Twitter or YouTube talking about 110s.
Hopefully we'll hit it and go longer than my dick, which is not long, but get that.
It'll be very funny if we just smash through 110s, don't even bounce, and go straight to 70K.
That'd be fucking terrible, but also really funny.
And then go to 200 from there.
Get the fuck out of here.
I would not be surprised at all if Bitcoin does that.
I know. Well, nothing surprises me either on it. It's so wild.
The one thing that actually kind of was different this summer around though is that usually summers Bitcoin doesn't hit all-time highs. So that's what they did to fuck us this time around. Is that they hit a new all-time high right early on into the summer, gets makes everyone think, oh, this summer will be different. We'll have a bullish summer, and then it gets a rejection, gives you a deep ass pullback and consolidation throughout the middle and end of summer, and then fall is whenever you get your actual moves. And the real reason behind why that works, how Crown explained it, is the premise where I mentioned before that retail traders and retards on their Bluffin and Binance and whatever apps think that their trades are the ones that are actually doing anything.
Moving the
No,
market, yeah.
yeah, it's the real money managers and the big firms that are moving the prices. And these seasons are when they adjust their positions, because they have major options and major contract expirations around these times. So they have to readjust. They have to extend their deadlines to make sure that their options don't expire worthless, because most people don't know how to use options and they just let them run out worthless. These people are trading hundreds of billions of dollars, so they can't afford to do that. They will reposition and extend their deadlines and change their strike prices, change the gammas and the thetas. They're going to make it all into their favor. So they have to rebalance all of that, which means they have to either buy or sell a very large amount of a certain asset around that time frame. In the summer, it makes sense for them to sell because they're not working, they're on vacation, they're going to their beach homes in the Hamptons and shit. So they're not moving any money around, and if they are moving money around, it's to sell so they can buy coke and hookers. During the fall, when they come back to work, that's when they're buying again, and that's when the prices start to go back up again. It's not magic. It's not like, oh, the season.
Wait, what happened? Oh, you got stuck.
Billions and billions of dollars worth of call options that are going to expire on a certain Friday. Price is probably going to get run the opposite direction. Once those calls expire, the liquidity has been taken, then the real direction plays.
Then we run, yeah.
Seems a little difficult to actually comprehend that. Well, daily now we have 3 drives of bearish divergence, adds more to the idea of a pullback before one of these highs, and that divergence will be active as long as you're closing below about that same level of about $405.31. Your next target off the bearish divergence is going to be the bullish control zone. That sits at about $385. But the more realistic target, considering volatility is at extreme lows, is going to be your neutral zone. And right now, the neutral zone sits at the very prophesized and beautiful $350 zone. Check out the Jewel. Jewel is also forming a very bearish cross right now. Gotta hope that 350 to 330 area holds. I think it will personally, but my opinion doesn't really mean much.
343. It's what I have on my chart. My first level for ads on a long play here was 380, and second would be 343. What do you think?
Yeah, basically the same area.
Yeah. Okay.
4-hour also active bearish divergence, going to be active as long as you're closing below about $405, and your next move is into the bearish control zone, and the 4 hours already giving you that bearish Jewel signal with the pink crossing below the yellow. One of the high time frames, Coinbase is still looking bullish to me. I'm still looking for new highs. I'm going to give you the invalidation. And the reason I'm looking for new highs right now on Coinbase is because we do have momentum still strongly to the upside on the high time frames. It's still looking like the breakout is active to me as long as we are holding certain areas. Right now, we have just made a higher closing high on this entire rally. And after we get a higher high, usually gets a higher low. We broke freshly into the 400s, which has been the target for a couple of months now, and after that that higher high and the previous divergence targets hit, doesn't make a sense at the very least to start to come to reconnect with your 5 EMA at a minimum, and then use that 5 EMA as a spring to bounce towards new highs. Right now, and what goes along with the idea of that short-term pullback is you're hitting extreme areas on momentum, on volatility, getting to very extreme areas on the HPDR. At the very least, and with that HPDR giving you only 5% chance of continuation, the very least you're going to get some type of consolidation and reconnect with that 5 EMA, giving you the best probabilities of either doing nothing in this area and waiting for the higher low, or potentially getting a short, but the wick high is your stop loss. If you wanted to be aggressive, that's what you would do. That's personally what I would do, because I am more aggressive. And the invalidation for the bullishness, the invalidation for the short-term bearishness is that tick above that high, and the invalidation for the long-term bullishness is going to be either getting a tick below, let's see, about $142, or getting a weekly close below $240. Either one of those two things happens, then I'm going to say the cycle top is in, and we're probably going to be making another ever so slightly higher low, maybe somewhere in that $170, $180 zone. If we don't get, and it's going to be the same parameters as last time. You want to see a very big bounce from that area. If you don't see a very big bounce, you see a slight anemic bounce, I'm going to think that area is going to fail, and we're going to go towards somewhere around maybe like $70 to $80.
Oh my God.
And that probably is going to be another lower high too. And based off of the trend at that point, the trend is going to be towards zero. But I'm going to tell you that my personal opinion, I don't think that's going to happen. I'm going to put my money behind it too, that doesn't happen. I think we're probably just going to make another higher low, somewhere between 330, maybe 340, maybe consolidate some type of bottom around there. And from there, I do think we're going to go to $500 based off of all of the HPDR setups, and the bullish divergence targets, and the jewel setups with the volatility expansion. And those invalidation targets are the only things that would make me flip around on being more long-term bullish on Coinbase and being more macro bearish. And if I'm going to be macro bearish on Coinbase, I'm going to have to be macro bearish on Bitcoin as well.
As you should. As you motherfucking should. Alex, I know I asked you to do Tesla after, but instead let's do Apple, and I'll just quickly, someone here in the chat, Ramon, is asking me to post my Tesla chart just real quick. He wants to take a screenshot. So I'll take care of the Tesla thing right before I jump into Coinbase, and we'll just finish with Apple. Wrap it up. Now I'm lost in all my charts. Excellent. 1 second. Okay, here we are. I am on Coinbase. Perfect. Ok, ahorita voy a regresar a Coinbase. Simplemente me está pidiendo Ramón acá, un miembro del E-Trading Academy, que le ponga mi tabla de ¿cómo se llama? No sé por qué había puesto esto acá. Ah, porque era hombro, cabeza, hombro, y este fue el movimiento. Ok, olviden, ya no necesito eso. Ok, esta es mi tabla de ¿cómo se llama? De Tesla, para que lo tengan pendiente. Lo voy a llevar rápido a la diaria para que la vean todos en chinga acá y puedan ver que estamos todavía dentro de este triangulito. No ha cambiado absolutamente nada. Continuamos peleándonos con los promedios. El promedio del 9 está justamente aquí arriba en los 322. Y queremos ser alcistas. Olvídate de los promedios. Lo único que queremos hacer es poder cerrar por encima de los 334. No hemos cerrado nada de todo este movimiento desde que lo perdimos acá. No hemos cerrado nada por encima de los 334.65. Zona súper importante a mi gusto. Queremos ser bajistas, queremos llevarnos los 300 para abajo. Llévate los 300 para abajo y ahí estás del otro lado. Vamos a buscar literalmente mínimo los 240 y de ahí podríamos ir tranquilos a buscar nuevos mínimos locales. Entonces, si estás viendo Tesla en la diaria, lo quieres ver así desde acá, simplemente quieres o treparte la línea verde, bajar a la línea o perder primero los 300 y ya de ahí te irías al nabo para abajo. 2 semanas para que lo vean también, así de lejos. 2 semanas es lo mismo, básicamente. Ganas por acá, chido, empieza a subir en los 334 y ahorita van a ver por qué. Si pierdes los 300, ¿qué estás perdiendo? Tu promedio del 9 y tu promedio del 21. Y eso se doblarían una vez más. Aunque están ahorita invertidos, eso es señal de debilidad. Déjenme ver que no estoy diciéndoles pendejadas. están invertidos, pero están a punto de... No, están justamente anti-invirtiéndose. Verga, estoy completamente perdido en cómo se habla, cómo se dice eso, pero si llegas a perder los 300, esto se volvería a dar la vuelta, el 21 quedaría por encima del 9, eso demostraría debilidad y probablemente el siguiente objetivo sería el promedio del 100, que lo tienes acá, 244. De no aguantar los 244, estás hablando de 200 y ya de ahí pues sería el mínimo local que estaríamos viendo. Te dejo este gráfico rápido, mi Ramón, para que le tomes un screenshot. Y te voy a dejar el gráfico diario también para que le tomes screenshot a esta belleza. Que me quito el mouse. Listo. Lo que sea por esos miembros de Elite Trading Academy, mi estimado. Vale, vamos a Coinbase. Hacer análisis en putiza y vamos a ir a Apple, que Abu la pidió desde las 6 de la mañana y tristemente hasta apenas lo vamos a hacer. Aquí va, Coinbase. Damas y caballeros, la mejor forma de ver Coinbase es la de 2 semanas, en mi opinión. Esto explica mi línea meme justamente acá, que es lo que yo consideraría soporte. Hemos visto Coinbase tiene este gran patrón de Estados Unidos. Lo vamos a romper arriba de los 429. Es lo que queremos, tener estos cierres por encima de acá. Y eso nos daría un movimiento bastante agresivo, muy para arriba. Pero por ahora todavía no estamos ahí. Estamos a lo que podríamos nosotros nombrar como un tope local. Y puedes ver que nuestra volatilidad en la de 2 semanas nos ha llevado hasta acá. Y desde que pasó la caída del 2022, no hemos podido cruzar el 89% en volatilidad y estamos en 84 casi. Lo que me dice que estamos muy probablemente cerrando este movimiento por ahora antes de que se dé otro. Mensual, tienes volatilidad expandiendo a la alza, lo que nos dice y nos está dando más bias a ser alcistas. Vamos a poner rápido el HPDR en esto en la mensual a ver cómo se ve. Ok. Tenemos el rechazo ya del 61.8%, literalmente es esta parte de acá, la pueden ver. Este rechazo nos está tirando, pero de siempre y cuando aguantemos arriba de los 357, deberíamos de poder seguir buscando ir a este nivel en los 441. 2 semanas, ya lo habíamos visto, pero no con el HPDR. Esto es lo que nos sugiere que vamos a estar en modo corrección, porque estamos ya muy arriba, solamente te quedan menos de 5% de probabilidades de continuación por donde estás en el HPDR y esa es la de 2 semanas. Semanal, tenemos volatilidad a punto de contraer, rápido para que lo puedan ver, estamos a punto de bajar por el promedio, estás viendo que vienes del 88%, estás cayendo al 78.6%, siguiente objetivo debería ser los 351 y de ahí tu promedio del 9 en los 328 o el 50% en los 304 hasta la parte alta de la zona azul en los 284. Eso debería aguantar pero tranquilísimo. Y estamos viendo la caída en cripto, en Bitcoin, todo esto, pues obviamente tiene que ver con Coinbase, ¿no? También tenemos estos rechazos, empezamos a caer en temporalidades más cortas como la de 3 días en la zona azul. Nuestra media y nuestro promedio del 9 está en los 380, 375, que va a ser nuestro siguiente nivel. La parte baja de la zona azul de perderlo son 328 y el promedio del 21 está en el 50% en 320. Diaria, rechazo el 78.6% con vela, no topera, no es topera esa vela, que nos quede claro. Esta es una, ¿cómo se dice? Una estrella de no sé qué vergas, pero no es una vela topera, por eso estás viendo, aunque hayas tenido este cierre abajo que contaría como follow through, no lo tienes. Lo que sí estás viendo es que estás perdiendo el promedio del 9 en 1, 2, este sería el tercer cierre. Si el día de hoy cierras por debajo de 402, vas muy probablemente al 61.8% en los 354 y de no aguantar, tienes tu promedio del 100 aquí abajo, pero se ve un poco dramática la cosa. Les voy a quitar el HPDR y se los voy a poner claro, tranquilo, sencillo, bonito, para que todos lo puedan ver. Acá lo tienen. Coinbase, como pueden ver acá de cerca, y esto es lo que yo contaba. Vamos acá y tienes este rebote y vas a ir a buscar hacer nuevos altos. De nuevo, seguimos con Bitcoin y Bitcoin es lo que nos está diciendo también todo esto, porque recuerden, por más que veamos ahorita Bitcoin que pueda corregir hasta los 310, hasta los 110 o 111, más o menos por esos niveles, Coinbase, el equivalente de eso, y después ir a buscar altos históricos sería esto en los 380 o 343. 343 sería mi zona por acá para agregarle chido. Y te quieres pasar de listo, $300. Pero personalmente no sé. Si Bitcoin cae solamente a 110, esto lo vamos a tocar. Y acá es donde probablemente encontremos esto. Si Bitcoin cae de ¿cómo se llama? De 110 y cae hasta 106 y aguanta 106, esto. Pero si Bitcoin cae debajo de 106, esto va para abajo y muy probablemente vayas a ver los 240. Por ahora todas las temporalidades en Coinbase son alcistas, simplemente estamos cansados en el movimiento, lo puedes ver, ha hecho altos, altos más altos, bajos más altos, todo el camino para arriba, este rally cerrando en 445, simplemente es consolidación alcista lo que está haciendo. La manera de estar mal es perder el EMA 100 en la diaria en los 288. Si empiezas a ver que eso se pierde, olvida todo lo que dijimos de ser alcista y se va para abajo. Pero creemos que simplemente ver que nos está dando un setup de volatilidad también está preparándolo. Esto tiene más cara de ser alcista que bajista, aunque en súper corto plazo tiene cara de estar siendo más bajista que alcista. Alrighty. Alright. What the fuck just happened? Hang on, you're muted.
I think Alex's computer is still resetting, so I'll do this one.
Got it. Do you mind doing Apple?
Yeah, I got it. I got some good memories with good old Apple. My first taste of options trading.
I think you told me that story. You got yeah, right.
At that point, I was just learning TA, and I was like, okay, I can tell general trend. I can see which way it's going. On the high time frames, Apple's quite bullish. I was looking at the weekly. I was like, it looks like it's gonna hit new highs. So I bought a fuck ton of calls. I put in $9,000 into 2-month out calls, and we had a little bit of consolidation, a little bit of a dip. And then we finally see Apple breaking out. It was hitting all those new the highs that I was looking at. I was like, "Fuck, I'm probably up tens of thousands of dollars because I had such a great entry. Price is now up so much higher. I'm looking at my calls down 85-90% because they were going to expire in like 2 weeks. Even though I was right on the timing, the price was higher than the strike price that I bought. They were worthless because of the decay over the time." And because me not knowing how the fuck that works,
to operate that,
so I was thinking the price goes higher, maybe I'll make some more of my money back. No, price went higher, they just went down more and more and more in value until they were worth zero.
Until they expired.
Yeah, options.
Terrible.
That's why
Not my thing.
I don't like to fuck with that because you don't only need to be right on the direction, you also need to be right on the timing. Why do you need to add that extra headache to your life?
Do you know why people play options, though? You know why people play options, though, right?
It's a lottery ticket.
It's exactly people that don't want to learn TA, that have no idea what's going on every single finance website. If you go on Yahoo Finance and whatnot, they'll tell you what the popular option numbers are and what the expiration dates are. So it's basically a coin flip, but they're also giving you some like betting information.
I even take it difficult to take like trades that people give out like that with stop losses and TPs, unless like I'll never straight up take it. I'll only even consider it if it's somebody that I really highly respect, like somebody like Alex. I'll consider those trades, but to buy options on that, like that's just brain dead, lobotomized.
Absolutely. Boom.
And then people say crypto is gambling.
Everyone's fucking retarded.
We actually have the benefit of having a little bit of insider info onto how that options market works, because Crown was a market maker for options on the NYSE. and the language is intentionally convoluted and ambiguous.
Well, of course, in everything, dude. You think lawyers really, you think contracts really need to say thereby, hereby, in for, like all those words? No, they're doing it to confuse people. So you hire a fucking retarded lawyer that has the same contract, giving it out to everyone 30 times and charging you every time as if he just made it brand new. And every time you talk to a lawyer, they tell you, it's not like we grabbed all contracts. We start from scratch. Shut the fuck up. It's 2025.
It's like it's the same thing with the bills in Congress. You just have a certain outline template, add in the certain details to it, and voila, print. You got a 1,000-page bill.
Yeah, it's fucking nuts. Get it, sir, so that you can go celebrate your birthday.
6 month on Apple is now forming many drives of hidden bullish divergence. We have taken out this low, this low, this low, and this low, while putting in higher lows each time around. That gives you 1, 2, 3, 4 drives of hidden bullish divergence currently on the 6 month, which will be confirmed if you get any close above about $250. I'd like to see a close slightly above that area at the median, so I'd prefer to use this high at about 260. Technically, it would be this one, but I'd feel more comfortable using this one. The 4 drives of hidden bullish divergence at that point would then give you a minimum target of hitting somewhere around that 38.2%. And that's the absolute minimum target. Very likely it's going to go a lot higher than there. That 38.2% alone is sitting at about $361. That is 67% move up on a mega cap like Apple. Pretty insane. The more likely move, however, is going to be somewhere around that 61.8% that we topped out right here, topped out right here, topped out right here, and the 61.8 level sits at about $474. That's more than 100x on 100, not 100x, 100% on price action. 100x would be a little crazy. I think the days of 100x for Apple are over. On the 6 month, Apple is flashing that God mode sell signal on the Jewel, but it is a 6 month time frame, and there's going to be a lot of fuckery in between those 6 months. I wouldn't put that much weight on this sell signal as I would on the lower term time frames, because if I show you some more examples of where there was a God mode sell signal right here, we hit new all time highs. Then afterwards we switched into a neutral signal. Quarterly is also still holding that bottom 38.2%, holding our 9 EMA. Momentum is still technically to the downside, but as long as we are holding that bottom 38.2% and the 9 EMA, more likely than not that we are going to, at the very least, retest this median at that $250 zone, which is a current test of our all-time highs. Right now, monthly is also, quarterly is also putting in that hidden bullish divergence possibility. You'd have to close over about $225.19 to confirm it. That confirms that would put me on the bias that maybe we'll get a rejection at this median, but I do think we're eventually going to blast through it. Right now, the quarterly Jewel is also starting to flash a God mode sell signal. Hasn't confirmed the sell just yet, but it very likely will confirm as long as you close below about that 225 area. So not only will it invalidate the sell signal, but and it would also confirm the hidden bullish divergence. Monthly is also now about to reclaim all of our major EMAs with momentum breaking into the bearish control zone. This is monthly is putting in the possible hidden bullish divergence also by taking out that previous low on momentum. Price is still making a higher low, and as of right now, this is currently a possible deviation of our 21 EMA. Right now, we still haven't closed above it. We still have 6 days left to go, so this could just be a rejection close under the 21 EMA. And if that happens, I'm going to say that this is going to be a failed higher low bounce. And we're very likely going to be coming down to test out 100 around that $140 area. I'm slightly more towards the side that we are going to reclaim this 9 EMA and get a test up at the very least somewhere around that 250 area. Even if we're bearish, I think we're going to retest 240s to 250 one more time. Right now, the 2-week momentum is also flipped to the upside. 2-week is putting in, is this lower low? Yeah, it is. No divergence. Is there any regular divergence possible? Let's see. Nope, no regular divergence possible either. On the other hand, there is possible hidden bearish divergence because we are taking out this level here on momentum where price is still technically making a lower high. To confirm that, we would have to close below about $207. You can, if that hidden bearish divergence confirms, that's what's going to all but confirm for me that we are going to break these lows and probably go towards 140. Just a possibility until confirmation, though. And once we close above about that same 225 level, it'll no longer be a possibility. As of now, it is slightly leaning towards the bullish side, with momentum being pointed up and volatility expanding from 0%. Weekly is also now right at that reset zone with momentum still pointed to the upside. Did we have what's the closing low on this one? This is 198.53, 196. So a slightly lower low with higher low on price, giving you weekly bullish divergence possible. And that will confirm with any close over about $212.40. The weekly bullish divergence, if confirmed, wouldn't exactly take you to new all-time highs. It just gives you a move into that 250 to 260 area, which is, I'd say it's roughly about 250, right along these current highs. Any tick above that wick high of about 260.10, that's where I would say, okay, we're in breakout mode, and we're probably going to go straight up to somewhere around 280 to 300. And right now, the other thing we're doing with this weekly is we're just about to invalidate this silver cross to the downside. Five-day, just like the weekly, is also positioned to the upside with volatility just about to start expanding from extreme lows. The jewel's giving you a buy signal also. Is this jewel's giving you regular bullish divergence? And just like the weekly, we're about to invalidate that silver cross. Right now, the 5-day would have a technical target of about $224 based off of the HPDR median. 2-day also just about to start flipping back up on momentum. We took out all of these previous lows while making a higher low on price, putting in possible hidden bullish divergence. And that will confirm with any close over about $214.15. And that would also be a close over the median and a close over the 100 EMA, giving you targets of that same $220 to $230 area. The higher, which I believe it was the 5-day. Yeah, the 5-day was the one that would have given you the move towards about 250s. 250 to 260, and the confirmation for that 250 to 260 is getting a 5-day close over about 230. Interesting. 3 days right now telling you that it goes along with the idea of a very, very short-term pullback to somewhere around that $200 area. That's only going to be actionable as long as price is trading below 216.23. 216.23. And as the second you get a tick above 216.23 is where you're going to get that retest of that 230 zone. The 230 zone is going to be the area where it's going to be actionable to, if you want to take a short around 230, you could enter it right around this zone at around start scaling in at around 220, and then you stop loss at this wick high at about 250. It's not the best risk to reward, but if the lower high idea does play out, you would be going to about 140s from there. That's see how much the risk is in terms of the reward. So 13% versus 140. Yeah, that's pretty good. 3 to 1.
Yeah, 3
almost
to 1.
3 to 1. But the other thing that tells you with this projection at that 38.2 right at that resistance is the same idea that if you were to ticking above this area would give you the move to the 230s. But closing above that 38.2% gives you a different target. Closing above the 38.2% takes you up to the 78.6 based on the HPDR on Apple. And the 78.6% is that somewhere around that's slightly higher than the 230 zone, more closer to that like 240 zone. Not really much of a difference. I keep forgetting this is Apple and the moves are very small. Daily also, same idea of that pullback as long as you're below that $216 area. And from the daily, your first target would be right around that 100 EMA and that median at that $210 zone. Although I personally would think that this would be a very, very good area to punt into longs. Stop loss at this wick low here, very small, a tightened validation at about $207. $207. And at the very least, you're going to get a bounce to that 38.2%. This is good for one of those quickies. That's about a free 3%. Because even if we are bearish, we're very likely to get that bounce. Four-hour, also similar idea, making forming a local top, starting to form a Bart Simpson pattern over here too. The confirmation would be a loss of that median, which lines up right with that 9 EMA at the same low $200 level, slightly higher than 210. It's about 213. Really looking to me like the local top is in. And a similar area of that very low 200s would be your bounce zone. Let's go to momentum. Six-month momentum is now fully reset to the zone where the 30% area where we had our previous expansion from. And that expansion was in right around 2018. And we kind of went parabolic from there. We're actually slightly lower than the volatility that we were in that zone as well. And what Apple does on these parabolic moves, where it just continues up, getting very shallow pullbacks, is it likes to correct to somewhere around that 9 EMA. 9 EMA is where all of our major bottoms are. Here's the bottom from 2018, the bottom from 2016. I believe even 2008. Was it 9 EMA? I can't see exactly.
No, I think 2008 was the
No,
only
it's
time it
21.
went to the 21.
Yeah. Only time ever it went to the 21. And
Yeah.
even then, it just front ran the 21. But every single other major bottom has been right at that 9 EMA. You got 2, and you got 8. As long as we are holding, closing over that 9 EMA, but even more so, as long as you're holding over the 5 EMA, it's very difficult to be bearish on this on a higher time frame. It's the only thing you get from this chart is that it goes up and to the right. Let's draw one of these and see what the next relevant area would be. About $315 and then $400. $315 is very close to the 330 HPDR level. See, did we freshly turn up? Oh, we did indeed. And on this last 6-month close, we freshly flipped back up on momentum, maintaining the critical zone. Is there any divergence? Let's see. On this low. Yep, there's also hidden bullish divergence possible in the 6-month as well. It's a little bit difficult to confirm as of this moment. You would need to close over about $250, but that's probably going to send you massively in quotation marks, up to $300. Quarterly, I don't know why people bother trading Apple.
It's so boring.
I guess they get a sense of safety.
Yeah, but like, what's the safety going forward when they're fucking irrelevant in everything?
And safety, quote unquote safety, when you see pullbacks of 34% within the same, not even a year, within a couple of months, you see 30% move to the downside. I don't see how that's real safe.
Well, the other ones are 60 or 70.
That's true. I guess. Let's go over to now. Interesting. Volatility went into a contraction phase when momentum freshly flipped to the upside. That is something to note. If you want to get a number, a level to get volatility expansion, you'd want to see a close over this wick high, which would confirm your hidden bullish divergence, and that's what very likely gives you that volatility expansion at that 225 level. Monthly is now at 0% volatility after getting some slight expansion when we got our new all-time highs. We went to only about 43%. Now we're once again at 0% volatility. And last time when we were at 0% volatility, momentum was pointing to the downside. It is currently pointing to the downside again. Last time with 0% volatility, momentum to the downside, I would have said that the probabilities are to the downside because technically they are. Volatility is at zero, momentum's flip down. But whenever momentum flips up, that's where it really matters. Whenever volatility flips up, that's where it really matters where momentum is at. And at that point, momentum is flipping up. Right now, momentum is to the downside, sure, but we are still not approaching the edge of the bearish control zone yet. It's going to be one, maybe two more closures before we approach the edge of the bearish control zone. And then at that point, this pivot likely drops significantly and probably drops below where price action is, right? Unless the invalidation would be if we get a close below about, I wouldn't use this one, I'd use this one at about 100 and closing basis, $130. As long as you are closing over $130, you could even go to that $140 area, and this still would be active on the macro. And another bullish point is as long as you hold that area, since you're breaking these lows, you would also have a possibility for hidden bullish divergence, which on this month, it's even possible to confirm on this month. You would just have to close over about same level, $225.19, and that would do it on this monthly closure. It seems a little unlikely to me on this monthly in the next 6 days. I feel like this is going to be one of those moves where it makes it look bearish, gets a little bit of volatility expansion, and then plays out to the upside. And the only reason I even give it that type of benefit of the doubt is because, well, look how it looks on the 6 month, and because it's one of the biggest companies in the world. And I am tending to go on the side of the previous trend, that these bearish setups lead into more higher time frame bullish setups. Monthly, how many drives? Only one drive of hidden bullish divergence. Two-week now also right at that resistance zone. The 2 week enough for me is if you don't want to wait for the tick. If you want to be more aggressive, if you get a 2 week close over that 21 EMA as well, that's also going to be basically a flashing long trigger for somewhere around this breakdown zone at that $240 area. I would not try to play anything more than that. Just from here to here, quick 1 week trade, and you've basically outperformed 99% of the market that day. You don't really need to take it to new highs. 2 week any divergences? 2 week also has that possible hidden bullish divergence. 2 week confirming it would be closing over 216. Coincidentally enough, that'd be the same number you would have to close over that 21 EMA. So the closing over that 21 EMA, not only would it finally reclaim that area of resistance, it would also give you the hidden bullish divergence. Weekly is now freshly giving you volatility expansion from extreme lows, and momentum is now pointing to the upside. And we're going to be continuing to be pointed up as long as we're above about $240.50, $205. Starting to really shape up like a high probability local bottom, but we still haven't gotten the confirmation just yet. 5-day also is at extreme lows, getting ready for volatility expansion, with momentum still pointing to the upside as long as we're closing over about $203. Two-day also freshly positioned to the upside, Volatility is now once again approaching extreme lows, and we will be pointed up, maintaining the bullish control zone as long as we're closing over 211.15, getting right around that area. Equates to that 2-day 100. Daily is now just starting to expand from many periods of 0% volatility. Momentum on the daily as well as freshly flipping to the upside, projecting getting out of the bullish control zone, and we will remain flip to the upside as long as we're closing over 213. This is where it really starts to get shaky. This is what tells you that bulls are on the clock. That if they can't continue to bust from this zone here, bears are going to take over. Four hours now freshly flipping to the downside, not looking good. Looking like at the very least we're going to get a retest of that low $200 zone. And 4 hours going to be flipped down as long as we close below 214.50. So there's still hopium alive. It's just lower the time frames you go, the weaker it gets. 2 hours also flip to the downside with many periods of 0% volatility, and we will be flipped down as long as we're closing below 215. Right at that edge. Come on. Come on. Sometimes it is. All right, there we go. Hourly is also freshly flipped to the downside, giving me a lot of bias that the short-term move is going to happen to the downside. The number that we have to close over is that 215 area, and that would invalidate it. All right. So the higher time frames. Now on the macro high big picture time frames, Apple has never really looked bearish in its history, so I don't think it's going to start now, considering it's been up only for how many years? Well, the real up only started right here,
like almost 40 years. It was born like when I was.
Yeah, the real parabolic up only shallow pullback started from about 2006, 2007. This is when the iPhone came out, I believe, somewhere around
Yes.
here.
Yes, he did.
And ever since then, that's like 20 years of going up only and then getting small corrections to your fastest moving averages and just springing and going to new all-time highs from there. So just based on this, it's hard for me to say that Apple is anything but extremely bullish in the macro long-term picture. It starts to go a little bit different when you step down time frames. Quarterly is still very bullish. Monthly is still very bullish. You're all are showing you bounces from the exact areas you've always had springs to new all-time highs from. The only time frames that are starting to go into question are the lower time frames, and they're not even giving you confirmations yet. They're just telling you that you're right around that area where if you were to reclaim, you would get that move back up to retesting our current highs, possibility of breaking them. But if you fail to close over the area we are right now, or if you even get a slight rejection from where we are right now, it's going to make it extremely likely all those low time frame volatility setups are going to happen to the downside. There's still hopium alive for the bulls in that situation, but it becomes a lot more playable and actionable for the bears to then completely flip the momentum back into the downside. Very likely not on the macro time frames, but they could easily do it on the low to medium term time frames, and that would give you targets of somewhere around first around $200 flat. And if you start to lose $200 on a daily closing basis, that's where I'm going to be of the opinion that we're going to be going to 140. But right now, I am leaning very slightly in the medium to short term on the bullish side. In the macro term, I'm 100% on the bull side. I just want to see on the low time frames reclaims of certain areas. I want to see a 4-hour close over about that $225, $226 area. And then at that point, I'm going to be more on the side that, okay, we're probably going to break these highs. But even if I'm on the opinion that we're going to break these highs, I am still going to open a secondary smaller short right around that, as close as I can get to this high. this closing breakdown open of about like $240-ish. Stop loss over here. If this gets stopped out, you take like a 5% hit, but the long you're already in is in massive profit. And then you would just flip that short that you had into another long, and on the test of that high where you would invalidate the short, and that would give you a secondary long on top of the long that you already have. So it's kind of either way you win.
Yeah.
The only thing that you would have to wait for is the daily confirmation, whether we reject or close over that $215 area. If we can't close over that $215 area, then if you want to be aggressive, you can long to that 240s, and you could keep that long at the 240s because you would have a pretty good entry, and you would have that week low as your stop loss, and then hedge it with a little bit of a short as close as you can to that 240s with your stop loss in that area, just in case this is not the macro the macro bottom we're looking for, and you end up round tripping that long. No big deal. You've got the short. That's like the ideal nirvana method of trading. You don't really have to worry too much. But aside from those invalidations, that's my bias on the short term. As we are right at that edge, if we can get a rejection on the short term, I think we are going to get a little bit of a move to the downside. If $200 fails to hold, I'm looking at 140. Right now, if we do get a close over about 215, I think we're going to go towards somewhere around like 230s to 240s. If we get a weekly close over, not even a weekly, a daily close over about $230, it's actually 226, but I say 230 to be a little bit conservative. Then from there, I do think we're very likely going to go to new all-time highs, even if we get a rejection at the current highs. Daily close over about 230.
Very nice. Very nice, senor. Thank you so much. And that's basically it. If you boys want to run, celebrate your birthday, happy birthday, dude. Have a fucking blast. Enjoy your day.
Gracias.
As I'm sure you've enjoyed your week with these fucking birthday celebrations that last forever. You and my wife, dude. I swear to God.
It's a birth week.
It's a birth week.
Birth week, yeah.
Anything else you boys want to add? Look at before we go. Well, you go.
No, I'll see you boys on Discord. Appreciate you guys tuning in, and we'll check and watch that daily close on Bitcoin. That one, specifically losing the daily EMA 9 will be a big spot, and then watching that 116 very closely.
Yeah.
116.
And keep watching the alerts, because I'm looking at 2 setups for Apple and Coinbase that I very probably will post later today.
Nice. Well, thank you so much, guys. Enjoy. Happy birthday. Feliz cumpleaños, señor.
Muchas gracias.
Buenas tardes. You boys have fun.
Buenas tardes and hasta luego, muchachos.
Don't get too
Para
fucked up
mi
without me.
cumpleaños.
Ok, vamos a cerrar esto con Apple. Mi Ramón me pregunta, Salo, ¿cómo ves Apple a largo plazo en un año? Traducción de las gráficas. Es lo que te voy a dar porque personalmente no tengo una opinión de Apple. Es muy difícil para mí. Esto yo no estoy invertido ni tampoco busco invertir en él. Así que no creas que también soy un gurú en esta mamada. Tesla, pélenmela. Rivian, pélenmela. No. Pero no en Apple, honestamente. Ok, te estoy enseñando la de 6 meses. En la de 6 meses puedes ver que tu promedio del 9 está justamente en los 190. Nunca pierde Apple el promedio del 9 en la trimestral. La única vez que lo ha perdido y ha tocado el 21 es literalmente en el 2008, para que tengas una idea de lo raro que sería y las muy buenas oportunidades que son siempre comprar el promedio del 9 en la de 6 meses. Promedio del 9, 190. Si ves que el precio llega por ahí de los 190, sería bueno agregar a tu posición o empezar tu posición. Por ahora estás ante resistencia, lo puedes ver justamente acá. Esto fue resistencia, lo vencimos, lo perdimos y ahora estamos una vez más intentando pasarlo. La pregunta va a ser, ¿esto es un SFP o simplemente fue como la mentira fue acá? Este fue el SFP y ahora podemos continuar a la alza. Esa es la pregunta que nos hacemos. Por ahora, Apple en una tendencia súper alcista, sobre todo en la de 6 meses, lo puedes ver acá. Máximos históricos en esta vela, ¿cuáles son? Perdón, moví mi... máximos históricos son 260,10 centavos. Nada más quería mover eso. Ok. Eso es la de 6 meses. Momentum volatilidad está regresando para abajo, está y en el punto más bajo de la tabla. Esto quiere decir que Apple está esperando un movimiento demasiado agresivo, estilo más o menos, que se reventó. Pues fue toda esta subida. Nada más. Entonces vamos a esperar a que Apple se prepare para hacer otro de esos movimientos locos. La tabla de 6 meses te está diciendo más o menos lo que va a pasar con el precio en los próximos 18 a 24 meses, para que tengas una idea. No es algo que vaya en 6 meses, entonces la tabla anual, NEL. La de 3 meses más o menos es un año. Y aquí la tienes. Justamente el promedio del 21 fue aquí ni tocado, que es el tease que siempre te hace Apple, igual que acá no lo toca. Cada una de esas oportunidades son muy importantes para poder entrar. Abajo el promedio del 9 casi nunca está. También sería bueno comprar en el gráfico trimestral. Ahora, tu volatilidad está contrayendo por ahora y está bajando del 15%. Prepara un movimiento bastante agresivo Apple entonces. ¿Qué es lo que estamos haciendo y viendo? Mínimos más altos, altos más altos, luego puso este mínimo. Y personalmente creo que esto es lo que estamos viendo, ¿ok? Tienes pum, 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 pum. Y esto debería ser el que sigue a la alza. Y la neta, en todas las temporalidades, menos en las temporalidades más cortas, parece ser así. Mensual, estamos también una vez más por debajo del 15%, creando otro setup de nula volatilidad para Apple en la mensual. Un movimiento muy agresivo va a venir. Estamos por debajo del promedio del 9 y lo hemos estado por 1, 2, 3, 4 y esta sería la quinta sesión. ¿Cuándo más hemos estado por debajo del promedio del 9 por tanto tiempo? Aquí, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sesiones. Ha estado por debajo del promedio del 9 casi por un año y eso fue cuando abril del 2022 hasta el final del mercado bajista. Entonces, Apple lo inauguró cuando en abril del 2022 el mercado empezó a caer un poco antes. Así que Apple puede estar un poco atrás en cuanto a eso se refiere. Por ahora estamos 1, 2, 3, 4, 5 velas por debajo del promedio del 9. En postura mensual, esto es bajista para mí, pero estando por encima del promedio del 21 también, rebotado en el 34 y en el 55 con esta fuerza, me dice que va a ir a retomar este promedio del 9 en los 2.24. 2 semanas tienes volatilidad contrayendo después de haber visto esta expansión en esta caída. ¿Y eso qué quiere decir? Que probablemente la reversa venga. En la de 2 semanas, denme un segundo, escuché a Vini toser. Un segundito, no me tardo. Ah, ok. En la de 2 semanas, esta es la tabla que yo estaría viendo si fuera tú, Ramón, si quiero invertir en Apple. ¿Por qué? Porque va a depender en temporalidad corta acá qué es lo que pase. Si rompes este promedio del 21 y por encima esta línea meme está para que lo tengas en los 214.89. Si puedes romper eso a la alza y empezar a cerrar por encima de esta línea meme, la última vez que lo hiciste fuiste a hacer un alto histórico. Lo puedes ver, ¿no? La última vez que rompiste esta línea meme, que fue la única y la primera vez, llegaste hasta acá arriba. ¿Qué es lo que estás buscando viendo aquí abajo? Literalmente estás consolidando en la parte previa donde no había nada y muy probablemente vayas a ir a buscar un nuevo alto histórico por ahí de los $280, 290. Se mueve muy poco Apple para toda la gente que le gusta moverse, que cosas se muevan mucho como cripto y así. Apple es muy tranquila, es como un safety play muy grande, ¿no? Que es el de Warren Buffett también, muy a la segura. Para mí, yo ya no sé si sigue siendo eso, por más que vea las tablas alcistas, porque yo no entiendo qué tipo, no son buenos en inteligencia artificial, no tienen ya el mejor teléfono del mundo, tienen un excelente setup de casa y que todos los negocios tienen que ser parte de sus apps, pero puede que venga un mercado de inteligencia artificial, de aplicaciones de inteligencia artificial que cambie todo, pero no sé. No sé, no me voy a poner a apostar a Apple a ciegas, no lo voy a hacer. Lo único que estoy diciendo es, tenemos cierres por encima de los 2.15, acá, dame 3 y deberíamos de poder ir a buscar estos mínimos altos en los 255. Y ahí podría ser un hedge con un buen short de acá. Si te llega, sigas a los 255, entras, tu invalidación está aquí arriba en los 260. Y si lo sobrepasa, cierras tu corto, tu long sigue haciéndote más dinero y vámonos. Ahora, ¿dónde puede cambiar todo? Semanal también está volatilidad expandiendo ante esta subida y lo pueden ver apenas. Tenemos que esperar a que cierre esta vela en 2 horas y 10 minutos para confirmar. Si cierra por encima del 15% con esta vela verde, probablemente nos esté diciendo que vayamos a ir más para arriba. Aunque tienes un cruce plateado a la baja justamente acá, este cruce plateado puede que solamente sea el principio y esto sea un rechazo y te lleve una vez más a los 182. Por eso es muy importante poder cerrar por encima de esto y puedes ver que el precio ahorita tomó una bajadita, también la volatilidad diaria, periodos de nula volatilidad, tienes tu SMA 200 acá. Acá atentos, si llegas a esta zona y te rechaza el SMA 200 y vas para abajo, muy probablemente 180 vaya a ser el objetivo que sigue, que es un poco más alto de estos 169. Nice. Y eso continuaría siendo alcista en el overall de todo. Y es nada más cosa de esto. Lo primero que quieren ser, cerrar por encima de 215. Lo segundo, 222. Una vez que haces eso, estás puesto y preparado para irte a altos históricos. Pero a largo plazo, Ramón, como dices, la tabla me dice alcista, pero personalmente no te voy a decir que, uy, qué modelo de negocio tan chido tiene Apple que quiero también entrar en eso. No es para mí. Pero cada quien haga de su vida el papalote, ¿no? Y vuélelo donde guste o métaselo por el culo, ¿no? No tiene nada que ver, pero ahí lo tienen. Listo. Listo. Eso fue, damas y caballeros, qué feo que me tengan que ver tan grande. Todavía más feo. Déjenme, ¿saben qué? Pongo esta, ¿no? No, gracias a todos ustedes por estar aquí, acompañarnos el día de hoy. Ya me estoy sintiendo mucho mejor del cuello. Espero mañana los voy a ver para una y me preguntó deportes y ya empezar de vuelta, que ha estado durazno esto. Les mando un fuerte abrazo. Muchísimas gracias a todos por estar aquí con nosotros. Y recuerden, cualquier cosa que necesiten, nunca les vamos a escribir, ni Farhan, ni Alex, ni yo, en Discord, en ningún lado, diciéndoles que les vamos a enseñar cómo hacer algo. No es cierto. No es cierto, para que lo sepan siempre. Y cualquier cosa, pues aquí andamos. A toda la gente que vino acá, a Ramón, a Bu, a Romano, a Eder, a Rod, a todos los que están acá, un abrazote. Gracias a todos ustedes por acompañarnos. Pórtense bien, disfruten el fin de semana y más le vale a Oscar Piastri ganar este fin de semana. Cuídense.